Perfect. There we go. So, yo, what is good? What's up for everyone watching this on the YouTube replay? I hope you're having a great day. I'm having a pretty good day because today is actually my birthday and I wasn't going to stream, but I got sad. I'm like, I kind of want to stream because I don't know. I just felt bad about not streaming. So I'm like, let's do a quick stream. Why not? So, I have some stocks I want to go over in particular that I think are pretty good buy the dip opportunities currently. But before I share with you those, I want to give you a quick stock portfolio update, share with you my Robinhood portfolio first, my dividend only account. Here's how we're doing year to date. We're up 3.25%. And over the past year, we're up 26%. And here are all the stocks that we own in this portfolio. So a lot of growthy names like a Google, a Meta, Constellation Energy. And here's our total percent change. So luckily, we are green on every single stock in here. The past year has just been really bullish. I mean, specifically for Google in just 1 year is up 105%. And we're up 110%. We bought Google basically exactly 1 year ago. So we're only up 30% on Meta. And yeah, when we compare that to the S&P 500, the S&P is up 4% year to date, and they're up 30% the past year. So we have actually underperformed because we're only up 26 and 3%, but I'm still happy with these returns. And then here's my Roth IRA, which has not done too well. We were trying to bring the growth back, but we got into a little bit of some riskier positions than I thought. So if we go to our total percent change here, Cormedics has been struggling, Weeble's been struggling, but Weeble has had a nice little recovery the past month, up 32% the past month. But yeah, we're still down 9% on them. Hey, thanks, Nick and Plasma. And hey, what's up, Brian Paul? I appreciate y'all. Yeah, hey, thanks for the birthday wishes. Yeah, today's my birthday. I appreciate y'all. Yeah, I just did a whole portfolio update on my channel. So yeah, this is my Roth IRA. And then we have our Webull portfolio. This is like my risk on account. I don't really have any rules. I kind of just do whatever I want. Like my other account is my dividend only portfolio. This is my buy and never sell account, but I kind of just have no rules. I kind of just do whatever I want in here. And I've been shocked with some of the gainers in here, like specifically AMD. They were up 14% on Friday, not on earnings. Is literally because of Intel. Intel reported earnings saying CPU prices are super profitable now, and so AMD's just rallying because of that. So I'm not complaining. I'll take it. I'm not going to trim anymore. I already trimmed some shares, or the two shares at like 260, and we're up 180, so I'm just going to chill on that. Clear Secure's been doing pretty good. Robinhood, SoFi, Reddit, Microsoft. Hey, this is like our most recent purchase in here. I literally just bought Microsoft for the first time ever 2-3 weeks ago, and we're already up 17% on just boring mega cap Microsoft in literally less than a year. That's crazy. That's like 2 years of S&P 500 returns. We also just bought Uber for the first time. Yeah, here's some of our big losers. And two of these stocks are actually, I think, pretty attractive to buy now, specifically AbbVie, Progressive. These are they're defensive names. Like they're not exactly super growthy, sexy sectors like an AMD, but it's a nice industry to diversify into, I think. If you don't have any healthcare insurance to have as a small portion of your portfolio, in case tech ever does do bad or something in the future, these are nice sectors to own as kind of like a defense. So we'll cover those in a second. And then this is our real winner, our super growthy buy and never sell portfolio, where once we buy a stock in here, we can't trim or sell the position. So the reason we've done so good is because we haven't sold our shares before today. And we just picked some quality names, but like even though we're up 900% on this stock or 300% on this stock, we're not trimming or selling a single share. Oh, hey, watch out for the people in chat there. Let me get that guy off here. Yeah, hey, I'll never follow you, DM you. I don't sell anything. I'm just on here giving my opinion. I'm not an expert. But yeah, year to date, I can't believe it. This is really making us beat the S&P 500 year to date because all my other portfolios weren't. But we're up 60% return money weighted year to date, mainly because our largest holding is up 88% year to date. Our second largest holding is up 130% year to date. Amazon's up now like 25% year to date. Amazon actually just hit an all-time high. Has anyone seen Amazon recently? I've been shocked at how well they've been doing. They're actually selling their own chips now. They're like a mini NVIDIA. Let's see if we can find that news. Yeah, they're also investing more. Yeah, Meta signs multi-billion-dollar deal for Amazon's chips. Pretty crazy. So yeah, that's all our portfolios. Hope everyone's having a great Sunday. Hey, Eric, Prit, thanks for all the birthday wishes. And Tom, I really appreciate y'all. So one stock I actually want to go over is McDonald's. A lot of people are just going to be like, dude, no way you're about to say McDonald's boring stock is a buy, but y'all will actually love McDonald's if you did the research that I've done. And after that, I've actually made McDonald's my third largest holding. I have $5,400 in McDonald's. I'm only up 6.5%, but here's why, in my opinion, if you buy it now, you should get like 7% to 8% of your money back for the rest of the time. So McDonald's is really a real estate royalty company. If you go spend money at a McDonald's franchise, 4% of that whole transaction goes back to this stock as a royalty. Literally, they collect high margin royalties and they also collect rent because all the franchise stores are actually tenants. So they pay rent back to the parent company. But yeah, look in 2008, McDonald's is known for being recession proof, like literally recession resilient. Whenever they're like, here's the year 2008, they were the best performing stock in the S&P 500. They didn't fall because whenever they go into a recession or we go into a recession, historically sales at McDonald's go up and they acquire a bunch of cheap land in a recession. So here's what's so cool. It's a great dividend play. You get 2.5% of your money back in a dividend. And the forward PE is only a 22. They only trade at 22 times forward PE. Yeah, what restaurant do you know has over 30% net margins? So yeah, because it's not really one. So here's, in my opinion, you should get 2.5% in dividends, 2% stock price appreciation, and 2.5% stock price appreciation from same store sales growth. So basically, you should get 7 to 8% of your money back for the rest of the time. It doesn't outperform the tech heavy S&P 500 that probably does 10% a year, but it's still a nice little defensive sector to own, especially right now. So yeah, that's why I own McDonald's. It's a nice one. Like, just to own is like a defense name. No way, yo, AY. I don't even know how to say your name. Io, I think it is. Dude, no way. I really appreciate you for the super chat, man. I really appreciate that. Yeah, today's my birthday. I really appreciate that. All right, let's look at some of. Oh wait, so here's the other stock I wanted to cover. So we just looked at McDonald's. That one, maybe you don't want to invest in that one, but here's one I think you'll like that might be a little bit more growthy, but it also has a high yield. These actually have pretty decent yields. So if you buy AbbVie right now, ABBV, you get 3.3% of your money back just in a qualified dividend every year. And thanks again, Al, for the $5 super chat. You're so nice. I appreciate that. So AbbVie right here, this is a healthcare play. They sell a bunch of different prescriptions, and here's how they're growing. First off, the valuation isn't expensive. They only trade at 22 times next year's net income. But check this out. Here are all the prescriptions that they actually sell. Their largest prescription is Skyrizi, and this is what you want to see. These are the year-over-year growth rates in the middle. The revenue's up 32, like every quarter it grows 40 or 50%. Like it's up 33, after grew 58, after grew 52, after grew 85, after grew 104. Like they're on a streak of growth. And here's the annual trend. And that's just their largest prescription. They also have a bunch of other ones like Rinvoq or however this is pronounced. It also, in 2019, it was 47 mil of sales. Now it's 8.3 billion. And up 30% after 50, after 60. So that's why, in my opinion, you're not just going to get 3.3% of your money back into dividend. You should get 3 to 4% stock price appreciation on top of that dividend for an 8 to 9% total return a year from the growth of these prescriptions right here. I mean, we won't go through all of them. Like here's Botox Therapeutic, it's almost $1 billion this quarter for the first time ever. I mean, so anyway, that's one you could put on your watch list. They only trade at 22 times forward PE. And I do own this one. I am down 10% on them. I'll share with you. Yeah, look at this right here. I got 3 shares. It's a nice way to get some defensive healthcare sector with the high yield as well. Actually, let me pull up my dividends for you. I wonder if anyone's curious about that. So over the past year, we've gotten $100-something in dividends. Where was AbbVie? Yeah, look at this. So our little shares paid us $5.20 in qualified dividends, tax-free dividends for me. If you didn't know, qualified dividends, if you make under $49K a year, which is me, I make under $49K a year, qualified dividends are taxed at long-term capital gains, and long-term capital gains are taxed at 0%. So same for all these other dividends like McDonald's. Even though this is in my taxable account, I have McDonald's in my taxable account because I make under 49K. All these literal like $33 in dividends every time I get it, it's completely tax-free. That's why I don't mind having a taxable account. I also have a Roth IRA though. Gotta love the tax-free retirement account as well. All right, sorry if I'm behind here, missing some of y'all's stocks. I do apologize. All right. What's up? Have a great show. Hey, thanks, Narc. Thoughts on photonic stock? Is that hey, if you have a stock you may look at, let me know. Hey, Prit Patel, I got that off eBay. So I don't know where to help you out there, unfortunately. But yeah. Hey, long time no see. What's up, SSJ? So I'm moving too fast. All right, I apologize. So last stock I wanted to cover was Progressive Corp. So this is another one I'm down bad on. It's a nice little see, I'm recommending stocks like I don't just want to recommend like AMD right now or a stock that's at all-time highs because I get it. No one wants to buy a stock at all-time highs. So I'm recommending some high-quality stocks that they're not at all-time highs, but they still have quality fundamentals in my opinion. So this is the next one I want to go over. It's an insurance company. You've probably heard of Progressive before. And historically, this one's grown very nicely. I mean, if we just zoom out, like every year, this stock normally does very well. But they've had a rough 1-year chart. So that's why I just bought into them. So check this out. If we go to the valuation, they're not exactly expensive. I mean, insurance stocks usually trade cheap, but they only trade at 10 times net income. So here's Progressive at trading at 10 times net income, and they have good growth still. If we go to their net income right here, like after tax net income, easy metric to understand. They're the most profitable they've ever been. If we go back to 2022, it was kind of a tough buy. It's kind of choppy, losing money. But look at how they've just like evened out the profits. I mean, they're easily making 2.5 to basically 3 billion in net income a quarter. And what are they doing with 3 billion in net income a quarter? Well, they're actually rewarding the shareholder via a special dividend. So if you notice, they only pay you 10 cents a quarter. Well, they do this every January. So last January, they did a $4.50 special dividend. This January, they did a $13.50 special dividend. So every year they reward you based off how much net income they're making. And since I see that they're making the most amount of net income they've ever made, no wonder they're paying out record dividends. So, and I actually like that the policy, normally they only pay 10 cents a quarter, but I like that they do a special dividend every year based off how much net income they make. So only trading at a 12 forward PE. I do own 4.5 shares. And look at that. I bought in at $241 and it's $200 today. But let me show you what this special dividend, I actually received this special dividend. You're not going to believe this, but check this out right here. For my 4.5 shares, where is it? Yeah, so normally they only pay you, wait, I can't find it. Well, maybe, oh, here it is. Yeah, right here. Normally, they only pay you 40 cents a quarter, but that special dividend paid me $54 in tax-free extra dividends. Kind of cool. Anyway, that's kind of another stock I like. That's not at all-time highs. So, all right, let's look at some of y'all stocks. All right. Yeah, so yeah, this is where I'm going to analyze some of y'all stocks. If you got any stocks you want me to look at, let me know in the chat, and I do apologize if I don't get to them all. Sru said, is Microsoft, I saw Microsoft a couple times. Yeah, let me cover Microsoft because this is also my most recent purchase, and they report earnings this week. We have so much insane earnings this week. We have Meta, Google, and Microsoft all on the same day on Wednesday. So this is earnings week. Get ready. So stocks are either going to go up or down a bunch this week. But yeah, let me show you this. Here are actually all my most recent purchases in its exact order. So I just, oh, not there. Here it is. So I just bought Ouster, Uber, and Microsoft, and AppLovin. These are my 4 most recent purchases. I literally bought all these stocks less than 3 weeks ago on 3/27. That's when I bought Microsoft. That's when I bought Uber. And this when I bought Ouster. So literally 3 weeks ago, I bought these stocks. They're my most recent purchases. I haven't really done any buying since. I kind of spent all my money on this dip around here, and I don't really have much leftover cash. So here's Microsoft. Here's why they're just going to continue to climb higher. Here's why you don't take any profits. They still are only at a 24 forward PE. So one of the reasons also Microsoft is falling. So as we can see, they went from 550 to 350. Why did they fall? Because they're a software name. If you look at any software stock like ServiceNow, Adobe, Salesforce, all these software stocks are falling, and they're the number one software stock in the world. Their software, think of Office, Excel, spreadsheet, all that does 120 billion of annual revenue for them. They're the number one software stock in the world. So that's actually why they're kind of falling with the software names. But here's why Microsoft should do better, because they are hedged. They're saying, OpenAI is going to replace software. Well, did you know Microsoft literally owns 27% of OpenAI? So it's like they're kind of hedged, if that ever happens. But I don't even think that'll happen so soon. But also, if AI really does blow up and keeps getting bigger, that's just going to do well for the cloud business. And Microsoft is the number 2 cloud service provider. Number 1 is AWS. Then it's the Microsoft Azure Cloud. And that's why I love Microsoft as well. Their Azure Cloud does over 100 billion of annual revenue. So they're the number 1 software play, number 2 cloud play, and potentially number 1 AI play because they own 28% of OpenAI. So they have a better credit rating than the US government. So it's more likely that the government will not pay back the debt than Microsoft. So yeah, and analysts are so bullish. They're going to make 30 bill next quarter of after-tax net income, 31 bill the quarter after. So it's just a great never sell name, in my opinion. It's just so quality. You can't go wrong buying Microsoft, and you get like a 1% dividend, only a 26 forward PE. Not too shabby. Let's see here. AAOI. Oh, I saw Poet too. I know Poet. So this is Applied Optoelectronics or Optoelectronics. Hey, what's up, Riaz? We'll do IBM, DLO. Yeah, we'll do all these. So what's up, Billy and EDG? Now, I apologize again if I'm missing on some stocks here. I do want to get to all them. We're going to be live for another hour and a half. So here's AAOI. This is a $12 billion company. Someone's saying they're in the photonics industry. So, all right, let's see. So wait, cable television and then data center. So maybe they're converting from an old cable business to data center. How's the data center business going? See, these are good growth rates. It's up 69% or Well, anyway, let's see the analyst projection. So they're very bullish. Revenue is going to go from 100 mil to 190 mil. So revenue is nearly doubling year over year, and they're supposed to make profit on that 4.5 mil of net income, and that's real. So basically, you're buying this stock. If we zoom out on the net income right now, for the history that all they've done is lost net income, but analysts are now projecting in 2 quarters the revenue is going to double and they're going to get net income positive. So that must be why the stock is pricing in all that positive momentum. Like I can see why this stock has done so well because it's pricing in this future growth. So we definitely don't want to see them miss on these expectations. But yeah, maybe we'll even beat. So anyway, yeah, cool little data center play. They are expensive though. It's tough to buy at all-time highs, 12 mil market cap, no real forward PE yet, but I can see why that one's doing so well. All right. What's EFOI? What was this one? Energy Focus. Actually, we're not going to cover this company. Actually, we don't really like to cover these. If you look in the top right, this one's just so tiny. They're only worth $29 million. So the whole market cap, like you could buy the whole company for 29 mil. The stock's at an all-time low. Yeah, they lose net income every quarter. They have no revenue. So there's no fundamentals to judge there. That's some like swing trade, day trade thing if you wanted to do that, but I would not buy and hold and trust that one for the long run. So let's check out IBM next. What app is this? Hey, this is a brokerage. It's actually where you get stocks. So if you'd like to get this software, it's actually in my link tree, the very first link in it. So here we go. Next up, oh yeah, IBM. This is a cool dividend growth stock. So if you like high dividends, this one has a good dividend. So if you buy the stock right now, you get a 3% dividend. So no matter what, you buy it now, you're getting 3% of your money back in a qualified dividend. And the forward PE is a 22. So that's not expensive. But one of the reasons they're falling right now is because they're a big software name. And it's not just like a IBM problem. You look at any software stock like Adobe, Salesforce, they're even Microsoft, they have this similar downtrend, and half of IBM's revenue is their software business. And then they're also in consulting and infrastructure. So they actually beat on earnings. I wonder why they fell. So Morningstar says they're undervalued. The company's sticky hybrid cloud software portfolio is highly integrated, will drive long-term value creation. Interesting. So let's see if we can get like an earnings analysis. And yo, Puck, dude, no way. Thanks for all the gifts, Doc. Really appreciate that. No way. Yo, I'm gonna give you a follow, Puck. I appreciate you. Yeah, today's my birthday, so I appreciate that. So yeah, check this out. Software revenue rose 11%, led by data and AI platform, including Red Hat. Infrastructure revenue increased 15%, driven by a 51% surge in the IBM Z systems. Consulting revenue grew 4%, reflecting steady demand. Interesting. So wait, is there any like specific like news around them? IBM faces investor concern over AI disruptions to traditional software and consulting businesses. So that's the fear right now. They're saying they're going to get replaced by AI, but that's a call you got to make for yourself. This was being priced in. That's what's being priced into a lot of stuff, but they might just be overdoing it. It might be too priced in. Yeah, hey, try not to spam it in chat there. Hey, thanks, Puck. What are you buying before earnings this week? Yeah, hey, try to. Oh, I'm not buying anything before earnings. I'm actually specifically, I have cash right now. I'm waiting for earnings to go by because I'm scared something's going to fall and I'm ready to buy the dip on them. So yeah, this week here, I'll show you super quickly the earnings that happened this week. It's actually pretty cool. Here's some other data we get, but yeah, earnings hub this week. Or actually, I'll search by my watch list just to see the important companies. Watch list. Okay, so yeah, Tuesday we get Visa, Coke, but it's really Wednesday. Wednesday's the big day. Google, Microsoft, Amazon, Meta, all at the same time. All of their earnings at the same time. Now that's going to be ridiculous. Oh yeah, AbbVie as well. Caterpillar. Dude, this whole week is stacked. Like, I'm excited. Like, this is going to be like one of the most insane weeks in the market ever. So I'm excited for it. All right. Hey, what's up, Matt? Good to see you, brother. Take a look at TeraWolf. Yeah, that is actually that's a Bitcoin mining company that's converting to a data center company. So basically, this is why I don't love this one long term. All this company does is own a bunch of graphics cards. They own a ton of NVIDIA chips in a data center, nothing proprietary about that. And right now, still, all those GPUs, what are they doing? They're just mining Bitcoin. So digital asset mining, which is Bitcoin mining, is 90% of the revenue. But right now, they just got hit up by Google Cloud, I think. And they're like, hey, instead of mining Bitcoin with those GPUs, can we actually rent out the capacity of those for our cloud business? And they're like, sure. But that being said, it's still a tough buy because they lose a insane amount of money and are very leveraged. Like, they're not expected to get profitable either. Actually, let me check that. So actually, revenue is supposed to decline year over year. and they're supposed to lose 100 mil next quarter, 133 next quarter. So they're supposed to lose a lot more. So revenue growth is gone. Net income's going to go worse. I actually would not buy this one. I'm actually shocked to see this one doing so well despite the poor fundamentals. Like I know this one trades like a Nebius. So basically this company does the exact same thing Nebius does. They do the exact same thing APLD. Dude, I cannot type in B. Okay, yeah, they do the same thing Nebius does, APLD, CoreWeave, Iris Energy. They all do the same thing. They all just own a bunch of graphics cards. So that's actually the part of AI I'm not too bullish on. I'd rather be the one selling the chips to those kind of companies. I'd rather be NVIDIA in that situation. NVIDIA is kind of supporting that by buying all those stocks. Like NVIDIA literally owns a bunch of CoreWeave and Nebius. And actually, they just sold their APLD stake. But yeah, NVIDIA wants those data center stocks to do good because they're NVIDIA's biggest customers. Hey, what's up, Monkey D. Luffy? He says, got Hood earnings. Hey, should we go over Hood? That'd be interesting. Hey, we just looked at EFOI. We're actually not going to cover that one. I apologize there, EDG. If you have another stock you may look at, let me know there. I will check it out. AJ said Nike. Oh, and then we got to do D-Local. Please remind me to do that one. Random, what's up? AMPX. So Nike right here, this is one of the stocks I did sell out of. So the fundamentals did scare me. So I sold all my Nike shares at $79 a share. Well, it's at 44 today. So this one is just having a margin and growth issue. And they're not exactly, they're at a 27 forward PE, but that's like Microsoft is cheaper. Like Microsoft's at a 24. Here's the one concern, or I'll just start off by showing you the dividend cost. So Nike pays a dividend. In full disclosure, look at this right here. Exact numbers on their cash flow statement. Their dividend cost $609 million of net income a quarter. So they need to make at least $609 million to pay the dividend. And if we go to the there's the operating cash flow. So the free cash flow is slightly worse than this. So I'll pull up the free cash flow. They cannot afford the dividend a single quarter in the past 4 quarters. And same with the net income as well. So basically, even though they made $520 million net income, they technically lost $80 million net income because they paid $609 million out in dividends. So basically, they have over 100% dividend payout ratio right now, which is a little scary. So, and they're just facing a margin issue. Gross margins are down 3 after they fell 7, and net margin is the real tough part. Look at that net margin. They used to have a respectable double-digit margin, 10% plus net margin. Now it's getting squeezed. But that's also why the stock is falling so much. Like it's kind of like everyone knows that already. So, but it's just a tough recovery story that I'm not buying. And it's not like missing out on AMD. If you don't buy Nike stock and they rally, it's not like you missed out on the big next thing. It's Nike. Yeah. So personally, I'm just staying away from this stock. The dividend, they honestly need a healthy dividend cut, but I'd just be careful with that one because the dividend payout ratio does scare me a little. They need another Michael Jordan. Yeah. What's up, Kevin? So AMPX, I just bought VOO and VTI. Any thoughts? Those are great. Yeah, the S&P 500. You can't go wrong buying the S&P 500. The average retail investor and hedge fund literally can't beat the S&P 500's 10% CAGR. So if you can't beat it, you at least got to own it as a little percent of your portfolio. I don't think any financial advisor will be opposed to that. And by the way, with that being said, none of this is financial advice. I'm not an expert. I sell nothing. I have no course book. This is all my opinion. Just on here having fun. So here's AMPX. I think this is like a battery or like a battery component company. So battery business. Okay. So I think they get like the actual develop and manufacture lithium ion batteries. So if you're looking for a battery play, looks like they're selling to drones and stuff right now. I guess here's their proposal: 80% charge time in 6 minutes. Hey, can I get that in my phone? 100% longer running time. So I guess here's the kind of hype around their batteries. So let's check out the revenue forecast because, okay, so it is pretty good. Revenue is going to nearly double. Revenue is going to go from 15 mil to 28 million. So almost 100% revenue growth. What about net income on that? So they're only going to, okay, so this was a miss this quarter. They were expected to lose 5 and they lost 25. But if they are right about this and they only lose 3 mil and 2 million, they're basically losing no money and having great revenue growth. So I can actually see why this stock has done so well. The fundamentals are actually pretty good there. Again, it's really pricey. Well, 2.8 bill market cap. It is tough to pay, so I would not buy this stock at all-time highs. But it's interesting. It's definitely one of the better ones I've seen. Yeah, look at that revenue growth. And the revenue growth isn't going to stop, It's going to go from this, 11 mil right here to 29 million. So, and that's assuming they don't beat on earnings like they have. Cover Robinhood. All right, let's cover Robinhood. All right, let's do it. All right. I see a lot of people asking for Robinhood. And again, sorry if I missed stocks here. I'm like kind of backlogged. And someone said, can you look at RLX? Yo, what's up, Orlando? You talking about Roblox or RLX? We'll check out RLX too. Hey, what's up, Randy? Thanks for that. Morning, Nathan. Can you look at Main Street Capital? Yeah, we'll get to that one. And I'm so sorry I'm behind. I'll kind of go quicker here with these. So here's Robinhood right here. I am a Robinhood user, so I have a Robinhood brokerage right here. I've been using the app for a long time. And right now, the reason Robinhood is making so much money is because of prediction markets. So here, like right here, and I don't recommend doing these. Like this thing right here, it's pure speculation. It's not. This is not investing. But basically, whenever you go do one of these contracts, prediction market contracts, they keep a 2% net margin fee. Whenever you buy and sell a stock, they only keep a 0.1% fee. So literally, these prediction markets are 20x more valuable for their bottom line, and they're pushing it right now. And if we go to actually, we get the data here. We can see their event contracts traded month by month data. Like it started, event contracts used to be 300 mil. Now it's every month. Now it's like 3 billion, 2 billion, and that's making them a boatload of money. They're also making a bunch of fees from option contracts, crypto trading volumes, all that. So if we go to the revenue this quarter was 1.28 billion. And on this 1.28 billion revenue, they kept after tax 605 million, which means their net margin is a 47%. They literally are basically collecting royalties with a 50% net margin. So ignore this quarter around back here. It was a one-time gap adjustment, but this is real. This is the after-tax net income. Before tax was 650, after tax was 605. So this is real after-tax net income. So they really did have a 47% net margin. I'm super impressed with Robinhood, and they're just going to continue to make like a couple $100 million net income a quarter. They are expensive though. They're at a 40 forward PE, so it is a tough buy here. Morningstar actually says they're overvalued right here, but it's a great little crypto proxy, and I do own Robinhood stock. I own all the brokerages. So, I own Webull stock, I own Moomoo stock, I own Robinhood stock, I own SoFi, I own Dave. Yeah, look, I actually regret every share I've ever sold to Robinhood. But yeah, there's my Robinhood shares, SoFi, Futu, Dave, and then I have my Webull shares in my other account. But yeah, Robinhood, I'm a big fan of. They kind of usually follow whatever Bitcoin does. Whenever Bitcoin's doing well, that one usually does really good too. So yeah, hopefully that was kind of helpful there on Robinhood. Should I bet on AbbVie earnings? Hey, actually, I'm real bullish on AbbVie. I wouldn't be opposed to buying shares. Yeah, going into this week. All right. Main Street Capital, that's actually a dividend company. So if you want monthly dividends, this is one of the few stocks that actually have a sustainable monthly paying dividend. So this is Main Street Capital. This is a BDC, and BDC stands for a business development company. And by law, BDCs are required to pay out 90% of their taxable income in the form of a dividend. So this 6% dividend yield that they have is actually normal because of how they're taxed. And also, whenever you receive this dividend, it's not taxed as a normal dividend. It's actually taxed at short-term capital gains instead of long-term capital gains, like a normal qualified dividend. So you're paying a little bit higher tax on the dividend, but you don't care because the yield's so high, 5.7% yield. Here's how we can tell if the dividend is safe. So they made 131 million net income this quarter. If we average it out, we can easily say they're making 120 million net income a quarter. And let's go see how much exactly the dividend cost. It's in the cash flow statement. And right here, the dividend cost exactly a quarter, 85 million. So of course they can easily afford the dividend right now. And that's why they're even sometimes doing special dividends. So pretty cool dividend paying company there. They do loans. So basically a BDC, they do loans. They do first lien loans, second lien loans, and they have a bunch of preferred stock in a bunch of companies. I used to own that company. And Junior and Air, I apologize. Dude, thanks for all those gifts and roses. Dude, no way, Air. What the heck for that dreamy strings? Dude, I don't know what that was, but thank you so much, man. If you have a stock you may look at, let me know, Air. I appreciate you. All right, next up. What was next? Let me scroll up. Did Junior say a stocker as well? Yes, I want to. Okay, wait. I wanted to get to. Oh, I'm so behind on the RLX. Was that the stock that it was? RLX Technology. Okay. Well, the stock has not done too well. The stock's been flat. They're actually a Chinese company, so we'll convert the currency to US dollars. You got to be careful with the Chinese companies because they're. Oh, well, actually, there's a lot of future growth. It looks like in 2 quarters, the revenue's going to get 112 mil. So if we go to right now's revenue, well, wait, that's weird. Huh. Oh, maybe this isn't currency converted up here or something. I don't know. So this 2025 Q4 in US dollars, they did 163 mil, and they actually kept 40 mil on that. Actually, no, they didn't. So that must be interest. Okay, see, this is why I like deep diving into them. So look at this. This is so interesting. The operating profit is what the company makes before tax, before interest. And how is the net income higher than the operating profit? it must mean they're making interest on their cash. So I looked at the balance sheet. They have 1.4 bill of cash. And yeah, half that's in short-term investments, which is 1 to 3 week treasury bills. So let's go find, yeah, they literally make over 20 million of interest on their cash a quarter, which is propping up the net income. So that's actually kind of interesting there. So they have so much cash on hand that they're making 20 mil of interest. What was it? So actually like half the market cap is their cash on hand. So they're in this industry. I can't really talk about this industry, but if you look at the very middle of my screen, you can kind of see the industry I'm talking about. So that's like the Chinese MO stock, Chinese Altria. Haha, cool. I've been watching you for 2 years now when you recommended Perion. Thank you for inspiring. Hey, Air, I appreciate you, man. If you have a stock you want me to look at, for sure, let me know. I'll definitely check it out for you. Would you ever make a YouTube video about what stocks they buy for you, covering the fundamentals? Logan, yeah, I do that all the time. Yeah, check out my YouTube channel. I greatly appreciate that. Hey, Plasma, dude, for the 30 roses, I really appreciate you, man. So, World said AMD profit taking on the way, or he says AMD's going down. Yeah, hey, I wouldn't be shocked. That's the one I'm up a bunch on. AMD went up just because of Intel. So if we, this is like the second place to NVIDIA. So yeah, AMD went up 14% on Friday to an all-time high. They used to call them advanced money destroyer. Now it's like advanced money duplicator. So yeah, AMD's at an all-time high. Congrats if you ever bought this one. You're definitely up on your shares. But yeah, don't buy it now at a 77 forward PE. So I'm just holding on to my position. But yeah, they have some good forecasts. Is there any specific news here? Weekly news. AMD market cap surpasses 500 bill. Yeah, AMD plans multiple CPU price increases. Yeah, that should bring a lot of extra net income for them. AMD secures Anthropic order for next-gen MI450 AI chips. That's so cool. So yeah, Anthropic, the company that's supposed to replace a bunch of software companies, buying a bunch of AMD chips. So that must mean something, training an LLM on AMD chips, that their chips are good. Okay. Because that used to be an issue. They're like, AMD chips just aren't as good as NVIDIA's. But so here's D-Local. I think someone was saying this is a photonics play. Let me see what they do exactly again. So software infrastructure. No. Actually, I'm thinking of a different stock. So this is D-Local. Online payments. Maybe you can check out their website. Okay, they're trying to get my cookies. Yeah, reject cookies. Sorry, buddy. So I guess financial tech. Here, I guess some of their customers, they got Tencent. Dang, see, I have like a black filter on, so it's like hard to see the text. So I guess it's like a cross-payment, cross-border solution. So they do like invoice collection. All right, so I think they're mainly like international markets. Let me check that out actually. So market breakdown. Okay, so yeah, here's the revenue breakdown. Notice you don't see America on here. 20% of the revenue is Brazil, 16 Mexico, Argentina 14, Egypt is 5%. So it's kind of like a South American or like an international software fintech play. And they're actually printing money. Holy schmoly. Look at this. They made 55 million in net income. Wow, the revenue's up 65. Last quarter grew 52, 49. So the growth is there. If you're going to buy and hold a software stock, that's what you want to see, just record revenue every quarter. And not just record revenue, but also profitability, where they made 55 mil of after-tax net income on that and 88 mil of free cash flow. And look at what the future projections are. They're supposed to make 50 mil in net income next quarter, 57 mil after. And notice they beat slightly every quarter. So what's the multiple? So they're only at a 16 forward PE. That's a very cheap forward PE. I'm assuming it's because they're in a more international stock. These international stocks usually just have a lower multiple than US stocks, but they're headquartered in, what country is that? Oh gosh, See, okay. So I don't know what country that is, but cool. That's why they have a low multiple, but pretty cool. And again, hey, what's up, Trapper08? What do you think about SIRI? Looks like they're in talks to merge with iHeartMedia. I think that's a radio station. So yeah, I'm not really blown away by this sector. Radio networks, home cable, stuff like that. But let's see if we can find any news. Yeah, SiriusXM becomes exclusive U.S. audio advertising representative for YouTube. Wait, for YouTube? That's kind of cool. I didn't know that. The partnership expands them to 250 million. So maybe on YouTube podcast or something. I don't know. Maybe you can read into that. Oh yeah, you're right. iHeartMedia and SiriusXM in preliminary merger discussion. Interesting. Creating a company that do over 12 billion in sales. They're in early stages and no guarantee. So let's go check out what Siri currently does. Um, Morningstar says are fairly valued while the company continues to generate robust free cash flow and strong growth in off-platform podcast advertising. Structural challenges from ubiquitous streaming competitors and a shrinking traditional subscriber base requires caution. So yeah, Pandora. I guess it's kind of losing to YouTube, Apple Music, Spotify, and then SiriusXM stock. Yeah, or their main core business, SiriusXM. Look at just the annual revenue here. It's kind of just declines low single digits. You know what I mean? So that's why it's a tough buy. Like, yeah, you see kind of just like low single digit decline on average, but they're still making net income every quarter. Yeah, they're making like 200 mil of net income a quarter and like 400 or 500 mil of free cash. Well, if you average it out, like 300 mil of free cash flow a quarter. But yeah, I don't know about the long term thesis on that one. It might be a good dividend play. Look at that, a 4% dividend yield. If you're maybe looking for a more high quality buy, yeah, like a Spotify or even like a Google, which owns YouTube Music. Spotify is this more of a subscription model company? I guess like Pandora is. But yeah, check this out. Here's Spotify. They have 750 million monthly active users, 476 million of those are ad supported, and then they have 290 premium subscribers. This is cool data we get. So they have 290 million. This is Spotify, 290 million premium subscribers, up from 263 million. So that's actually a good growth rate right there. So if we go to their bottom line, they're actually making good net income now. Sure, let me look at the before adjustment number. So yeah, look at this record profitability this quarter ever. They've never made more money in a previous quarter before today. And also with free cash flow, yeah, they're printing out like so much free cash flow. And like at these growth rates, like what's it going to be the same time next year? So yeah, they're making like 800 mil of net income. 900 mil of free cash flow a quarter. So they are expensive though. Well, not a 33 forward PE. So yeah, I like these subscription model companies like a Spotify, a Netflix, a Google with YouTube and YouTube Music and YouTube TV. I like all these kind of stocks. All right. Robinhood is only for America, isn't it? I'm not sure actually. I think Robinhood can be used in Europe and some other companies or countries. What platform are you trading on? Yeah, hey, the app I'm using right now is actually a broker called Moomoo. If you'd like to get this broker and use my affiliate link, it's actually in my link tree, very first link there. It's my favorite app to buy stocks and also analyze stocks on. I think it's great. All right. Yeah, hey, we just looked at Poet a second ago. If you give me a minute, we'll check him out again. I see Hims. Yeah, okay. And this one's just kind of being out innovated by Amazon right now. So basically, this company is just an online platform where you can get your like weight loss prescription delivered to you, your like hormone products delivered to you. But recently, the stock fell like 10% on 2 separate days on Amazon and Walmart expanding their own online delivery business of these weight loss prescriptions. So let's see. FDA removes 12 peptides from Category 2 list. Okay. Hims and Hers partners with Eli Lilly and Novo Nordisk to offer FDA-approved GLP-1 medication. So yeah, basically, you can order your weight loss prescriptions through Hims and Hers. And let's see how they're doing. They have a bunch of subscribers, I know. Subscription revenue expanded to 2.5 million users, a 13% increase. So they have 2.5 million premium subscribers. Profitability increase. So yeah, they have been struggling with profitability these past couple quarters. Like if we go to revenue right here, the revenue grew 28%. So the revenue's up, but the profits, the net income actually declined by 50%. There was a huge margin compression issue. Basically, they used to sell. There's a whole story I could talk about. They used to sell Hims and Hers, Wegovy, and Ozempic on their website, but then Novo Nordisk abruptly removed their partnership. So then Hims for a while was no longer selling any weight loss prescriptions on their website, which was printing them all this net income back here. So they decided to make their own knockoff weight loss prescription, and then they got sued by Novo Nordisk and tanked back here. And then they decided to end all the litigation, and now Novo Nordisk is back selling their products back on Hims and Hers. So it's just been a volatile ride. I've been keeping up with the story, but they're not exactly cheap, I don't think. Yeah, 53 forward PE. I'd actually rather buy an Eli Lilly, the one selling the weight loss prescriptions, because they're cheaper. Eli Lilly's at a 27 forward PE. Like, I can't believe that for the growth that Eli Lilly has, a 27 forward PE, they're the best weight loss prescription company with Zepbound. So anyway, pretty cool. They're just too expensive. Hims is too expensive to buy. All right, check EME. Yeah, let's do EME. So this is an electrical MEP play. which stands for mechanical, electrical, and plumbing. Let me get my water here. I actually love this is basically an HVAC electrical work, basically doing all the complex electrical work for data centers and HVAC. So they're trading pretty fair at a 30 forward PE. So you trade at 30 times net income. Check out the revenue. The revenue is 4.5 bill. And on the 4.5 bill, they kept 434 mil in net income. And if we zoom out, that's a record net income this quarter specifically. It's never even been like close before. And this was real. They did 434 million after tax. So actually, no, this actually was an adjustment. I'm glad I checked that. They didn't actually make 434 mil because before tax was 428 mil. So they actually made like 390 mil, which was still a record profitability quarter. But so yeah, that's actually artificially making their PE 30. They actually are trading at like a 35 PE, and they are right about that forward. They're at like a 30 forward PE. So anyway, I just really like this industry. They're at an all-time high, but all the HVAC stocks are. Actually, just made a whole watch list for HVAC companies, Vertiv, Amphenol, or Comfort Systems right here. This has been the best one. This is the one that I own, FIX right here. Madison Air just IPO'd. This is a cool new one that just IPO'd. Madison Air. Legence also just IPO'd a couple months ago. They've been on a running up like Nike. Is pretty crazy. All right. Can you please run Glad? Yeah, that's a REIT, I believe. Is that Gladstone, I believe? So, oh no, this is Gladstone Capital. So this is actually a BDC, another one of the business development companies. They pay a monthly dividend, and the yield is a 9.8% dividend. Most people, when they see the 10% dividend, they're like, that's too unsustainable. But this is a BDC, and by law, they actually have to pay out 90% of their taxable income in the form of a dividend. So that's why the yield is so high, because it has to be by law. Historically, though, they don't give you much stock price appreciation. You only buy this for the dividend. Like if we zoom out, Gladstone Capital is the same price that it was in 2008. So the stock is the same price that it was in 2008, but you collect the 9% dividend every single year. And no, that dividend is not qualified, so do beware of that. So you're paying a higher tax on it. So let's go check out how they're doing fundamentally. So it's really low revenue. You would want to be careful here. Like they did 24 mil of revenue. But on that 24 mil, they are still profitable every quarter, which is good. They made 5 mil of net income. That is a decline though. So I actually wouldn't trust too much money in this one. I think I'd trust maybe Main Street Capital a little more, but it doesn't have as high as a yield. But a cool ETF is actually BIZD. It owns all of the BDCs in an ETF right here, and that actually has a really high yield. So Van Eck right here, it owns all the top BDCs. Ares Capital, Blue Owl Capital, Main Street Capital, FSK, Blackstone Lending, which is also a really good one. So if you buy this ETF, you get a 13.5% dividend yield, and it just diversifies you into all of the BDCs if you don't know which one to get. Hey, what's up, Malik? Yeah, Amazon will hurt him. Yeah. So yeah, that's basically my exposure to getting into pharmaceutical healthcare delivery, just on Amazon. And I think they had news this week about expanding the GLP delivery. See if I can find this for you. Yeah, look at the second line. Amazon launches nationwide GLP-1 weight management program integrating primary care and pharmacy services. So I think they'll deliver it to you. Yeah, starting at $25 a month with insurance or $150 a month without insurance. And injectables starting at $300 a month. Same day delivery. So look, same day delivery for Amazon is available in 3,000 locations. So yeah, Hims can't beat same day delivery versus Amazon's network. So it is tough. All right. What's up, the big trout? And hey, what's up, Kevin? Good to see you. Remco. Yeah. Oh yeah, EMR. Yeah, that's another really cool one. Yeah. Let me do SANM, and I'm so behind on the chat here. I apologize if I'm missing out on some people's stocks here. Remember we already looked at RXT, but we'll get back to that one if you remind me in a little. Which app is this? Yeah, this is a brokerage. If you'd like to get this app, or it's a software you buy stocks on, it's actually in my link tree. It's the first link there. So anyway, here's SANM. Oh, this is actually I think the first stock I ever bought when I opened Moomoo. So, yeah, hey, if you use my link to sign up for this brokerage, we'll both get a free stock, I think. But anyway, congrats if you own this one, because they're at an all-time high, kind of like most semiconductor stocks, like AMD, Intel. And even though they're at an all-time high, check this out. They trade at 45 times net income, but this is a growth company, so you really want to value them off next year's net income. They only trade at 30 or 29 times next year's net income. So, anyway, if we go, you basically want to look at the future growth expectations. Yeah, revenue is going to go from 2 billion to 3.5 billion. So did they do like an acquisition or something? Yeah, the revenue just jumped up 58% year over year. So if you go to the cash from investing activity, so this might be why part of the reason they grew so much is because, yeah, they bought a company for 1.4 billion. You want this to be negative. That means they're buying assets and buying a company. If this number was positive, that means they're actively selling out of their assets. So where does the revenue come from? So notice this is like an international semiconductor play. Just Mexico is 40% of the revenue. APAC is 25%. US is 17%. EMEA. So yeah, Malaysia is 7%. So it's like an international, electronic component, semiconductor products. Cool. Maybe they're like a manufacturer. Yeah, hey, I'll do it again, Ali. If you give me like 5 minutes or just like 2 minutes, we'll check it out after one or two more stocks here. George said RMBS. Let's check out RMBS, then we'll do Lockheed Martin, and then we'll check it out. So here's Rambus, or if you have a different stock, we can check it out. So here's Rambus. Congrats. Wow, they're at a crazy all-time high. So if you've ever owned this stock, you're definitely up on your position. What do they do? So semiconductor space. So yeah, anything semiconductor is doing amazing right now. So internet protocol spanning memory and interface security. So there is good growth. I mean, revenue is going to hit 200 mil in 2 quarters, and they're going to be profitable. They're going to make 66 mil, or they're already profitable. Dang. So yeah, they're already making good net income every quarter. What's the margin on that? So they already have over a 30% net margin every quarter selling their semiconductor parts. So they just have more continued growth. Oh, wow. This is even a better like safety net. They have no debt. So this is a completely debt-free company. Look at that cash pile. Cash went from 480 to 780. Because when you have no debt and you make this net income and free cash flow, it just goes to your cash pile. Yeah, 100 mil free cash flow quarter. They're actually insanely profitable. Only bad part is they're just really expensive. Oh, it's another like international semi play. So look at that, South Korea. So if you're bullish on South Korea, all nations are trying to get into data centers right now and AI. So yeah, South Korea, Singapore, and then the US. US is 17%. Nice. So yeah, they're just pricey at a 62 forward PE, but congrats if you own them at an all-time high. And they report earnings on tomorrow. Wow. So they report earnings tomorrow. So if you own that stock, get ready for tomorrow because you're going to go up or down a bunch. So let's check out RXT right here. What was that? Yeah, okay, Rackspace Technology. Yeah. So dang, unfortunately, this stock has not done too well. If you look in the top right, they're not worth too much. Like, this is why you don't want to trust a lot of money in this name. They're only worth 390 million. So that's just like a very small market cap. You know what I mean? Like if you're just going to dime, or let's see what sector they're in. I don't remember this one. Let's see. They're in the software infrastructure play. So they're a software company. And that might be part of the reason the stock is, struggling so much right now, because all of software is struggling. So public cloud and private cloud. So if they're just like a cloud business, this is a super commoditized industry. AWS cloud, Azure cloud, Google cloud. I have my cloud plays via them. So I don't know why maybe someone would choose Racket Space over the other ones. And they're highly leveraged. Oh, I super wouldn't buy this company. Geez, how are they going to pay off that debt? So so first off, the growth is gone. Like, you'd think cloud would be a super growthy industry, but no, they're organic, the lifeblood of the company, the revenue. It's like these are all year-over-year declines. And they're losing net income every quarter. And they're extremely leveraged. Like, how are they going to pay off $4 billion of debt when they make no net income? So I can see why this stock is at an all-time low. Would I buy them? Fortunately not. So I didn't mean to be too bearish on you there, but yeah, that's why I like digging into the fundamentals. Like, that kind of makes that stock unbuyable. You know what I mean? Like, if cloud's booming right now, like Amazon, AWS, Google Cloud, Azure Cloud, that one just isn't. So I don't know. I'd just be careful with that one. Hey, what's up, Best? Good to see you, man. He says, what do you think of ServiceNow? Yeah, so this is one of the software companies that tanked. I mean, look at this. It went from $250 to $90 right now. So look at that. They actually have a Google Cloud partnership, it looks like. That's kind of cool. Or basically, I think that just means they're a customer of the Google Cloud. So ServiceNow and Google Cloud expand partnerships to integrate AI platforms for autonomous enterprise adoption. So basically, anyway, this stock is struggling because they think software is going to replace this company right here, or AI is going to replace this company. Even Morningstar says they're undervalued. Their fair value is $160 a share. Let's actually get the software breakdown, or the earnings breakdown, because they just reported earnings. So their subscription revenue increased 22%. That's great, to 3.67 billion. Net income rose 2%. So I guess that's not great net income growth, but recent acquisitions like MoveWork and Armis enhanced AI and security capabilities. Oh yeah, they just acquired a company called Armis or whatever that was called for $7 billion. It's a cybersecurity company. And that's part of software that I like because cybersecurity, I feel like isn't going to get hurt. Like I could kind of maybe see Adobe and Duolingo getting hurt from AI, but not so much as like a cybersecurity company. So yeah, anyway, Morningstar sees them undervalued, industry leading position in IT workflows, successful horizon expansion. Okay. Anyway, I love the subscription business model. If we go to their revenue right here, this is what you want to see. Every quarter, they just hit a record revenue. Like not every year, but literally quarter by quarter, the revenue just hits a new record. And not just the revenue, but also the net income. But the net income growth is slowing a little bit. Like the net income only grew 2%. So that might be, actually technically it grew 11, but maybe it's from an acquisition related expense. But anyway, that being said, they are still kind of pricey. Like I didn't, like even though they're on this dip, they're still at a 41 forward PE. And when you just compare that to like a lot of other software stocks, that's still a little pricey. And that's why I think this one, like, sadly might still go a little lower because like a 41 forward PE could still go lower, but I think the risk reward is starting to look decent to maybe nibble on the stock, but now's not the time to go crazy buying the stock yet. Hey, what's up, Mo? He says, we finally found you. How are you, man? Hey, I'm great. How about you, Mo? I appreciate that. Malik said, look at FLNC, so Fluence Energy. I think this might be one of those like alternative energy businesses. So they're a $2.5 billion company. Let's see exactly. Or their utility. Or maybe let's go to their website right here. Okay, no cookies for you. Maybe they just, yeah, energy storage solutions. So it's kind of a commodity. They sell just basically big storage. So yeah, revenue from energy storage products. So let's check out how that is down here. So the revenue, actually, that's crazy. They did 475 mil of revenue. And on that 475 mil of revenue, they did, was that real? Yeah, that was real. They actually did lose 62 mil in net income on that. So, oh wow, is Simmons the largest shareholder? Look at that, Simmons, which is another electrical infrastructure stock I like. Is good. So yeah, they're projected to still lose net income next quarter, but then they're going to make 12 mil in net income. Revenue is going to go from 600 mil to 900 mil. So they have a little bit of like choppy business model. So they're not like cheap. I mean, yeah, look at that. They're at like 480 forward PE. So I don't know. I don't know about this one yet. I would still definitely be careful with this one because yeah. I wish I could give you better thoughts on that one. That probably wasn't too helpful there. I don't know if it's just like a low margin industry or what, but you know, you'd think that that industry would be in such demand right now. Can you look at ACMR, great growth? Yeah, so ACM Research, okay. Hey, what's up, Red? Then we'll look at Caterpillar. What's up, Lulu? What's good? Probably in your feed, but what is your top stock? So right now, I'm kind of, I don't just want to recommend stocks that have already gone up so much, like an AMD or an Nvidia or, you know, Robinhood or some of these stocks that have gone up so much. So some of the decent stocks I like right now that is still have quality fundamentals. Like I'm not just recommending them because they're on a dip. I like these because they're on a dip and they have great fundamentals. Is Progressive. These are a bit of a more defensive industry, but I like Progressive right now and AbbVie, ABBV, and McDonald's stock. McDonald's stock is a steal. It's one of my largest positions. It's a real estate royalty company. So yeah, if I go to McDonald's right here, I got $5,400 in them. One of my biggest positions. All right. So anyway, let's go back to ACM Research right here. So let's see how they're doing. So what does this company do? So yeah, look at the current valuation. They trade at 40 times net income, but they only trade at 26 times next year's net income. So they're going to have a lot of growth. Single wafer cleaning. Okay, so it looks like they do something with semiconductor like wafer chips, electrical chemical plating. Interesting. You know, I bet that industry's in demand. So the revenue's up 9%. And the profits did fall 40%. So like, here's the one thing to note. The profits like did fall. Is that like a gross margin issue? Yeah, gross margins fell 17. It went from a 49 to a 40. Net margins fell too. So I don't know if this was like it wasn't a one-time adjustment, or maybe it was actually. Okay, actually it probably is because it looks like they just bought a company for 350 million this quarter. So maybe that's why it hurt the profits. Huh. What's the forward multiple? So yeah, 26 forward PE. That's not expensive. That's not expensive. Huh. If you're looking for a semiconductor, I guess like wafer cleaning, Electrochemical plating. It's kind of an. I bet they're just going to benefit from AI. Yeah, from data centers and stuff. Interesting one there. Yeah. So let's do Caterpillar. Yeah, thanks again, Rad. So this is a great like US onshoring like construction play. They're not just benefiting from construction, but also like resource energy, like a lot of in farming. So a lot of commodities like rare earth minerals and like crops, the commodity prices have gone up, and it's making the demand for the tractors and the big heavy machinery go up at Caterpillar as well. So yeah, half of the revenue comes from the power and energy industry, then it comes from the construction industry, then the resource industry. So like mineral projects, but yeah, like mines. But look at how they've been crushing on expectations. Like they're not just going up at all-time highs because like of momentum. They're going up because they're crushing on earnings. Like analysts expected them to do 17.7 bill. They did 19.1. Like for the past 3 quarters in a row, they've been beating on expectations. They expected 2.07 billion in net income. They did 2.4 billion. So they're crushing expectations. Still a little pricey though at a 36 forward PE, but they deserve an expensive multiple because they're just so quality right here. John Deere's been doing really good. United Rentals has been doing really good as well. It's a nice dividend growth stock as well because you get a good yield, like a 0.8% yield. They raise it every year to beat inflation. So congrats if you own that one. I wouldn't trim or sell my position. It's a great just never sell stock. So yeah, I actually own United Rentals. All right. Might want to look at CW. Curtis Wright. They're on my watch list. What does this company do again? Is this like an insurance company? No, it's an aerospace and defense company. So, okay, that's an industry I really like. So if the war conflict, geopolitical stuff starts to escalate, these aerospace and defense stocks are a nice hedge. So yeah, naval and power, defense, electronics, aerospace and industrial. I bet all these sectors are growing and have great future growth expectations. Like naval and power is up 20%. So maybe they do like submarine stuff. That'd be kind of cool. Here's their website right here. Okay, yeah, reject cookies. Sorry, bud. So yeah, commercial aerospace, nuclear power plants, industrial. Okay, anyway, naval and power. Yeah, leading edge technology. Submarines are cool. Okay, anyway, let's just go look at the fundamentals. So, okay, so they're expensive at a 47 forward PE, but all the aerospace and defense stocks are expensive right now. Like if you look at like a Raytheon, a GE Aerospace, they're all a little pricey right now. But it's because of the war stuff. Their future earnings are going to go up. They print money. So here's CW right here. Yeah, that's actually technically a record net income. It's never been higher before. So 137 million of after-tax net income. Free cash flow was 350 mil. So just nice, like year-over-year increases, like for the past 4 quarters in a row. Nice double-digit year-over-year increases. Same with free cash flow. So, and the future projections are nice. Net income is going to go from 116 to 133. So, yeah, revenue is going to jump up. They had a big beat on revenue. They expected 890. They did 950. Sheesh. Nice. All right. Texas Instruments at an all-time high now. Yeah, man, congrats. Like if you just look at Intel's at an all-time high, AMD's at an all-time high, ARM's at an all-time high. What's Texas Instruments? Tixon. Yeah, this one, yeah, congrats if you own this one too. This one has a bit of a little dividend issue right here. Oh, it looks like they're acquiring Silicon Labs for $7.5 billion. Semiconductor market recovering, continuing. Industrial sector shows 5 to 6 months of growth. Cool. Maybe we can analyze that one. So let me get to this next one. I saw Rocket Lab. Oh, Stinky, what's up? He said Comfort Systems. And actually, let me go over Berkshire Hathaway. Yeah, what's up, Matt? This is a cool one, actually. Berkshire Hathaway, this is the Warren Buffett managed company. It's kind of like a alternative to the S&P 500. You know, the S&P 500 gives you like 10% of your money back plus. And Berkshire Hathaway is supposed to do that as well. It's kind of done that for all of history. So it just owns a bunch of stuff, kind of like an ETF. So 30% of the revenue is insurance. They own Geico. They wholly own Geico and a bunch of other brands and businesses too, like Pilot, the like gas station. They own BNSF Railroad. They own 27% of Apple, 20% of Coca-Cola. They have a bunch of stakes in a bunch of different companies. So they don't pay a dividend, but the way they return money to shareholders is via share buybacks and buying new companies. So anyway, yeah, nice little ETF basically. Morningstar says they're undervalued, steady underwriting profitability, generating low cost flow. Yeah, basically they can loan out that insurance money, the premiums they collect for free. Basically, free loans they're getting. Kind of cool. Oh yeah, Lockheed Martin is what I wanted to get to. So real quick though, I got to get to Rocket Lab. Then we can do Tesla. I think Rocket Lab right here. This is another space stock right here. They're launching a bunch of satellites into space for NASA and JAXA. Yeah, look, Rocket Lab successfully completes second dedicated JAXA mission, deploys eighth demonstration spacecraft. Cool. Rocket Lab backlog surges 73% to 1.85 billion as launch capacity shortage drives 10% annual price increases. So they have a crazy backlog. They're raising prices. Everything. They're worth $45 billion now. They're not close to profitability, but anyway. Oh yeah, here's Morningstar. Yeah, they says Rocket Lab is overvalued. Its persistent lack of profitability, increasing negative free cash flow, and stretched valuation multiples overstating long-term growth potential requires caution. So yeah, definitely at its right now valuation, like it's almost like you can't buy it at current prices. But there's just a lot of future growth priced into this stock right here. Like check that out. Revenue, like that's what you want to see. Revenue just hits a new record every quarter. Part of this was from their Geost acquisition. They've been doing a bunch of acquisitions. If you go to the cash and investing activities, they've been basically issuing shares to buy companies, and it's worked. But yeah, if we go to their profits right here, they're still losing over 50 mil in net income a quarter. But actually, net income losses are supposed to narrow to only 36 mil, and the revenue is going to go to 205 mil. So, it's actually one of the best, more quality space stocks, but you can't buy it at current valuations. But it's a cool one to add when they do fall. So yeah, their launch services are up 80% after grew 400%. Space systems are up 15 after grew 75 after grew 30. So real good growth on them. So yeah, honestly, they'll probably just trade off their earnings. So you're really gonna watch out for these next couple earnings reports. All right. What do you think about BlackRock? Oh yeah, let's do BlackRock. Oh, hey, then we'll do Coinbase. And I think there was another stock I was missing out on. Yeah, hey, try not to spam there. Yeah, we'll get to Coinbase eventually. So here's BlackRock right here. This is a great asset manager, PE, private equity business, but I love their ETF business. So yeah, here's some news talking about it. BlackRock's Bitcoin ETF holds 61 billion of Bitcoin. As spot Bitcoin ETF draws over 1 billion in year-to-date inflows. Pretty cool. So yeah, if that Bitcoin ETF goes under their alternatives business right here, and check out that annual growth between 2024 and 2025. Why did it grow 71% from the previous year? It was from the Bitcoin ETF, and now they're getting into an Ethereum ETF. So that's what I really like about BlackRock. So yeah, that business is really growthy, and they're also in a bunch of other businesses as well. Like if you ever click on a stock and you go to shareholders, you usually see BlackRock is one of the largest shareholders. They technically just own shares for their customers. It's not the parent company that owns it. It's via the BlackRock ETFs. So yeah, anyway, they print net income. They're making 1.5 to 2 billion net income a quarter. They only trade at 18 times next year's net income. You get a good dividend. You buy the stock right now, you're getting over 2% of your money back just on a qualified dividend every year. So actually, I'm a big fan of BlackRock. They were really falling earlier because of all the PE, private equity, private credit shenanigans. Oh, remind me to get to JP Morgan. I see JP Morgan as well. Yeah, remind me to do that one. So let's do, Coinbase right here. This is a cool like Bitcoin proxy. Yeah, so look, here's the price of Bitcoin next to Coinbase. As you can see, it's not perfect, but like they rhyme together. You know what I'm talking about? Coinbase versus Bitcoin, the stock charts look almost identical. Is there any specific news? Coinbase launches, okay. Coinbase launches gold and silver futures markets. So it looks like they're expanding away from just crypto. That's what's cool about Coinbase. And that's why I think one day they're going to decouple from Bitcoin. When like Bitcoin's going to go up, I think Coinbase is going to go up more and also fall less, because I think they're getting into these like prediction market, other industries where they can collect high margin fees on top of just crypto. New York attorney sues Coinbase and Gemini over prediction markets and alleged illegal that word. So yeah, basically, you want to, I guess they're getting some scrutiny over the prediction markets, but if they can just have the prediction markets, that's going to make them a lot of net income. I guess Morningstar says they're overvalued. An inherently volatile and deeply cyclical nature of crypto markets, coupled with the looming threat of significant fee compression from intensifying competition, requires caution. So yeah, just like to be honest, to be totally honest, I'd much rather own a brokerage. I'd much rather own Robinhood than this stock or an interactive brokerages, which also collect super high margin fees every time someone does a crypto transaction like Coinbase and holds their crypto in there. But yeah, check this out though. Here's some good metrics. Well, it actually declined year over year. So this is their monthly transacting users. So not just monthly active users, but monthly transacting users is 9.2 million this quarter, when the same quarter last year was 9.7 mil. But what's the valuation though on a forward multiple? So yeah, they're expensive even. Dang, they're at a 63 forward PE. So actually, I'm not a big fan of buying Coinbase right now. Actually, they're more expensive than Robinhood, and I trust Robinhood more. So I'd actually rather buy Robinhood stock over Coinbase. But if they can, I bet they'll make some good money from this prediction market stuff if they can pull it off. They'll probably beat on earnings if I had to guess. Everything all-time high. Is there any undervalued stocks for the long term? Yeah, I like right now AbbVie, McDonald's. McDonald's is a steal right now. I really like that one. So Remco said ICE right here. So if anyone's heard of Polymarket, they actually just took a big stake into Polymarket. So it's like the only publicly traded way to own Polymarket. Another way to just, if you want exposure to prediction markets, is, I guess Coinbase now and Robinhood. But here's ICE right here, the Intercontinental Exchange. They're an index, like market maker pretty much for indexes and exchanges. But basically, I like that they just took a big stake into Polymarket. So basically, if you go to their net income, ICE prints money. This is their after-tax net income, easily over 800 million of after-tax net income a quarter. And if we zoom out, I guess it kind of is flat from 2020, but it's still an insanely good amount of net income. So they're making 800 million net income a quarter, and you get a good dividend. You get a 1.3% dividend yield. They raise it every year with inflation. Any specific news around this stock right here? Not really. All right, what's the valuation though? Okay, a 23 forward PE. That's actually fair. Only a 23 forward PE. Interesting there. And they're also in mortgage technology. So maybe like a mini Rocket Mortgage, fixed income and data services. Interesting. Anyway, all I know is they print net income over 800 mil a quarter. 5 below. Hey, what's up, Gary? Said EGHT. Let me actually get to that one because I saw that one earlier. 8x8. I've actually not heard of this stock. What's up, Matt? He said adding BlackRock and Robinhood to the top of the watches. Yeah, those are two really good ones. So here's 8x8. This is a very small company. Yeah, be really careful. Oh yeah, then we'll do Lockheed Martin. If you look at the market cap, they're only worth $260 million. Like when you're only worth $260 million, it's just such a tough amount to trust with a meaningful amount of money. So the revenue's not too growthy. Like the revenue, the lifeblood of the company. Revenue's only up 3%. Last quarter is up 1. Last quarter is up 1, and then -1. So it's not like, yeah, if we kind of zoom in on the revenue here, it's not exactly extremely growthy. Revenue's been flat, or revenue's lower than it was in 2022. That might be why the stock is lower than it was in 2022, because the actual fundamentals haven't increased. But what about the profits here? So they actually made net income this quarter. They made 5 million in net income. That's actually really impressive. And they were expected to lose 500K, and they made 5 million. And they really did make that. Now, this is interesting. So if they can continue to pull off, if they can just continue to make 5 million in net income a quarter, that's 20 million net income a year. And as the companies were 200 million, they could potentially be trading at like a 18 forward PE if they can. I'm being extremely generous and bullish with my expectations, but if they can just make 5 million net income a quarter, analysts aren't seeing that. They're expecting to lose a couple mil. And it could be really interesting. Bit leverage. They probably have more debt than the whole market cap. Let's see. Current debt of 26 mil. The nasty stuff, the long-term debt. They got 300 mil of long-term debt. So, how are they going to pay off 300 mil of debt when you only make 5 mil a quarter? But so I'd just be really careful. Just wouldn't trust too much money in that one. But it is certainly interesting because I can see a little light at the end of the tunnel if they can pull this off where it's not going to zero. Could be a good returner. Next up, I wanted to let's do Lockheed Martin. Lockheed Martin right here. This is another great aerospace and defense company with a good dividend. So if you like high yields, dang, they had a big recent drop. I wonder if there was any specific news. Let's see. Lockheed Martin expands munitions production, secures a 5.7 billion Patriot contract and triple output to 2030. Pentagon proposes 1.5 trillion defense budget with 85 F-35 jets made by Lockheed Martin. MAS and Lockheed Martin partner to establish F-35 maintenance depot in Canada. So basically, with Lockheed Martin earnings miss estimates on F-16 and C-130 program cost overruns. So maybe that's why the stock fell. Free cash flow was negative at 290 million versus positive 900 mil. So they did just report earnings. Okay, they reported earnings 2 days ago. Let's see what the earnings were. All right, so the orange line's what the analysts expect. So they missed on revenue slightly. They expected 8.25, they only did 18. And they missed on net income. They expected 1.58, they did 1.48. And missed on EPS and on EBITDA. So it was a real organic miss on the earnings. But what's the valuation though? But yeah, so even though they missed, they're still only at a 17 forward PE. So I guess they had some slight cost overrun sitting the stock down, but I'm still really bullish on like if war fears start to escalate and stuff, this one should just benefit, with the Pentagon defense budget expanding and their missiles and like look how diversified that they are. Aeronautics, rotary and mission systems, missiles, fire control. Like I want to own the company. I don't want to own the war. I want to own the company selling the bullets. You know what I'm talking about? Like the picks and shovels play almost. Lockheed Martin's a good one. Moog is actually a great one as well that I just bought for the first time. Lockheed Martin, Raytheon, they're big customers of Moog. All their aircraft use their patents and stuff and their components. All right. Yeah, AbbVie's a really good one. All right. Any stocks that have good dividends? Yeah, McDonald's I like. Actually, I have a list right here of kind of like some good high yielders. BlackRock was on there. Oh yeah, Procter & Gamble. Look at Procter & Gamble, Emperor. I saw that one too. Coca-Cola, Lowe's, McDonald's, JP Morgan, Johnson & Johnson. This healthcare one's also fallen a little bit. I love their oncology business. Should bring lots of growth for the future. Here's another healthcare play, kind of like Johnson & Johnson. This is Gilead Sciences, GILD. They actually remind me of AbbVie because they also have a similar yield. You buy the stock right now, you get a 2.5% dividend yield, and the valuation isn't expensive. It's only trading at 19 times forward PE, just cheaper than AbbVie actually. But yeah, half the revenue comes from this one prescription. They sell just like AbbVie a bunch of different prescriptions. Their largest prescription is half the revenue, and it's growing very nicely. I guess the growth has slowed down a little bit to like single digits. Like their largest one only grew 6.8% year over year. But yeah, wow, this one really just kicked up this recent year up 30%. So yeah, basically they have all these different prescriptions right here. And when we combine all of them together, total revenue grew, okay, yeah, so 4.7. So if we kind of zoom out here, revenue is technically lower than it was in 2016. But they are making just consistent profits every quarter, like easily, wow, over 2 billion of after-tax net income a quarter. That's how they can easily afford the dividend. And that's what's probably led, that's why they're not crazy much higher than in 2016. Like the revenue was, so they're only like 20, 30% higher in stock price than they were in 2016 because the revenue's only 20, 30% higher than it was in 2016, or actually it's the same. So usually like companies stay at a market cap, companies stay in a valuation range whenever they can't grow the fundamentals. And that's what we're kind of seeing right there. But it's still a nice healthcare play. We just want to see them kind of bring the growth back. Procter & Gamble, this is another one I really like. It's a nice staple play. They own so many over $1 billion value brands like Tide, Gillette, Old Spice, Huggies. So many brands like that. I love how diversified that they are. Check this out. Fabric and home care products, baby, feminine, family care products, beauty products, healthcare, grooming, which is Gillette. And then so many brands like that. And they print net income. I mean, this is real. No matter what, like this company is making roughly $4 billion of after-tax net income a quarter. And what are they doing with $4 billion of after-tax net income a quarter? Well, they're paying dividends. If you buy the stock right now, you get basically 3% of your money back, 3% of your money back in a qualified dividend every year. And the valuation's a 20. So they only traded a 20 forward PE. But the growth has been slowed down a little bit recently. That's why the stock is falling. Because yeah, look at the revenue, low single digit growth right now, 1.5, 3, 1.7. But I trust this one. Out of all the staple stocks to buy on the dip, don't buy a Kimberly-Clark. Don't buy some of these other names. The best buy is like Procter & Gamble. Yeah, don't buy Clorox. I think Kimberly-Clark is stuck 2013 range. All right, next up, let's see. Wait, what did I want to cover next? Um, well, I forgot. Oh, hey, what's up, B Mills? Good to see you, man. Hope you're having a great day. MU stock cover. Yeah, Micron, this is your memory shortage company. There's just so much future growth priced into this stock. And I can see why they've done so well. And I'll honestly expect them to continue to keep doing well. Um, so if we look at the forward multiple, they only trade at 5.4 times next year's net income. Is that right? It actually is. Look at the net income projections. Net income is supposed to be 22 billion next quarter and then 25 billion the quarter after. And then you can't see it, but it's supposed to be like 30 billion the quarter after. So basically this company is going to go from making, a 1 to 5 billion net income a quarter to over 100 next year. They're going to make well over 100 billion in net income, and the whole company is worth 560 billion. So that really is true. They're only trading at 5.4 times next year's net income. But the truth is, the next 2 years, like 2 years from now, is when they're going to peak in EPS. Like basically, they have insanely high margins from this memory shortage, but the supply chain issues are supposed to fix by like 2028. But yeah, that's the only thing you want to watch out for, is that like 2028 is going to be peak ever EPS, and then the margins will start to normalize as the supply chain fixes. But as it is for the next year and a half to 2 years, like Micron should just continue to climb higher. I actually wouldn't really trim or sell my position, because this forward PE of a 5.4, I feel like it could easily stretch up to like an 8 forward PE. So that's just kind of, hopefully that was kind of helpful there. Um, Okay, Charlie said thoughts on INFQ, recent partnership, um, and cash is low, 40 mil a year, Nvidia's choice. You should check out the website. All right, so here's inflection stock right here. Let's check it out. Hey, and then we'll do what's up, Dat One Dude? Thanks for showing up to the YouTube. We'll do Constellation Energy, Verizon, SoFi. I apologize, I'm behind on the chat here. But yeah, this is a $2.9 billion company. The stock is technically this, or actually they IPO'd in 2025. So they IPO'd in 2025. Product revenue. Well, yeah, let's actually check out their website. So they're a software infrastructure company in quantum computing, I guess is what they're saying. Engineers world-class neutral atom quantum computers, precision sensors, and software for governments, corporations. So they have 235 plus patents issued and pending. So 235 patents pending. Customers and collaborators, these are some of their customers and stuff. Well, let's go check out the actual revenue, because that's what matters here, and the forecast. Oh, so this is the tough part. They literally just IPO'd, so we don't really get any data. That's why it's super hard to trust this one. Yeah, very leveraged balance sheet. So the last time they had 9 million of revenue, lost 9 million on it. So I guess for the full year 2026, they're going to do 40 mil of revenue. These are, I guess, the S&P global estimates. We only get the full year. So full year 2026, they'll do 39 mil, headquartered in the US. And it's just so early. I wish I could give you thoughts on them. Yeah, they literally just IPO'd. So yeah, they're not. Yeah, I just can't really give you any real thoughts on that one. I apologize. Do you think BlackRock will continue to grow over the next 20, 30 years or plateau? Yeah, I think BlackRock will just slowly go up. I like their asset management ETF business. Like they're not going to get out innovated. They're getting into crypto and stuff. So that one dude said CEG. If This is like a great AI infrastructure play. This is the company powering data centers, powering the Bitcoin mining rigs with their clean nuclear energy. This is the best, the purest nuclear energy company. They own 30% of all the US's active nuclear reactors. So literally purest nuclear play. There is no close second. So all right. Actually, they did this Calpine acquisition, and this acquisition is literally accretive like $2 to their EPS, which is pretty crazy. So you really look at a forward multiple from the EPS acquisition, they're only trading at 28 times next year's net income, which is pretty cool. A 28 forward PE. So they're the number one nuclear play, number two, or basically number one natural gas play, and the number one geothermal play. So I have no complaints around this one. 0.5% yield. You get a good share buyback. They're doing acquisitions. They're an unregulated utility, and I think they're going to be the growthiest utility, and that's why I own them. I own $4,700. I got 15 shares of Constellation Energy. So yeah, full disclosure, I might be biased because I own them, but I own them for a reason, and I'm not trimming or selling my shares. They might be still actually a little pricey at current prices, but still cool. So Rodney said Verizon, how do you feel about it? This one you basically buy to maximize your dividend income because the truth is you're not going to outperform the S&P. Like this is here's the chart. Verizon stock is the same price that it was in 1998. So if you bought Verizon in 1998, it's the exact same price that it is today. And but what you do get is a nice dividend. So you basically buy this to maximize your dividend income. You get a 4.4% dividend yield and yeah, 9 forward PE. Hey, no way, Plasma. Since how much you grow. Remember when you had like 10 viewers on TikTok? Tomorrow's my 2-year anniversary. Hey, thanks, man. Yo. And thanks for all the birthday wishes too. Yeah, today's my birthday actually. So I appreciate everyone saying that. Someone said and I just forgot to respond. But yeah. If y'all want to hit the follow button, I stream every Sunday this exact same time. I sell nothing. I have no course, book, WhatsApp, Telegram. I don't coach. Literally just on here give my opinion. So yeah. Ooh, Plasma said PLAB. Oh, Phototronics. Okay. Actually, I have this one on my watch list. Semiconductor equipment industry. Actually, yeah, only a 22 forward PE. So this company trades at 22 times net income. They do integrated circuits, flat panel displays. Looks like the growth is just now happening because before today, they really had no growth. Yeah, if we go to revenue right here, like low decline in growth. But this quarter, they had a 6% revenue jump, which is good. But that might be why the valuation's so low because the growth is just low. Can't beat nuclear. I'm up on Vistra Energy, SMR, and CEG. Hey, nice one. Yeah, I love the nuclear industry. Hey, thanks, Jello. I appreciate that. And Mason, thank y'all. I appreciate that. But yeah, PLAB though. So even though the revenues, the growth is low, they're still making good net income every quarter. Like easily 50 mil if you average it out of net income a quarter. So yeah, that's why they have that good forward PE. And actually, a good thing is that they have no debt. They literally have no debt at all. 640 mil of cash. Wait, 640 mil of cash, no debt. The company's worth $3 billion. So 20% of the market cap is their cash. Literally 20% of what you're paying is their cash on hand. So that's actually cool. Hey, what's up, Mason? Or it's my birthday today as well. Yo, GOW, dude, happy birthday, man. You just do this for fun. Yeah, I'm just on your. Yeah, this is just for fun. I'm just surprised people show up and watch it. So I appreciate y'all. I'm also the best way to support me. If you did want to support me, though, the only way to support me is to just follow my YouTube channel. I'm trying to build up my YouTube channel. Hey, thanks, Stocks Crypto and Adam, Marcus. Appreciate y'all. So we'll look at a couple more here. Card. Hey, what's up, Joe Schmo? He said, keep up the good work. Hey, thanks, dude. So Card said TSEO. This is Tractor Supply Co. And they just tanked on Friday or on earnings this past week. They went from 45 to 35. So let's see what they reported. Because I know Caterpillar's doing really good. John Deere's doing really good. But I guess this one isn't. So they slightly missed on revenue, slightly missed on net income, and EBITDA as well. So, I guess there's just not really much future growth projected. Net income's going from 260 to 265. So I guess the forward PE might be close. So yeah, look at that. Current PE is an 18, forward PE is a 17, but that's still like really cheap. Livestock, agriculture, seasonal and recreation, companion animal, truck and hardware. So I guess it's just this like net income decline. Like, yeah, check this out. Maybe in 2023, 2024, yeah, they were making consistently a lot more net income than they are maybe this past year. That might be the reason the stock is falling. It's just they're missing on growth expectations. Yeah, the revenue's kind of just been flat for a while. Revenue's kind of low single digit, 3.3, 3.6, but or that actually means margins are slightly fallen, but I don't know. Interesting one. Ooh, Koss said Palantir. Hey, thanks for the rose. Yeah, let's do Palantir. No way. Dude, that one dude and Brandon. Dude, thank y'all very much for the super chats. Dude, thanks that one dude and Brandon for the $10 super chat and the $5 on the YouTube stream. Dude, thank y'all so much. I appreciate that. Y'all made my day. Yeah, let's do Palantir, then SoFi. Yeah, SoFi, I love that one too. So Palantir, this is a phenomenal growth stock. Dude, Brandon and that one, dude, if you have another stock you want to look at, let me know. I'll happily check that out. And thanks, 730. So here's Palantir right here. They have insane growth from the government, So a lot of police stations, the military, the Air Force all use Palantir software. Even ICE uses their software. So that's why they're actually being a little boycotted right now from an ethical point of view. But yeah, look at the government revenue. It's up 60%. After grew 40, after grew 10. So the growth rate is growing. So this is the highest growth rate on the screen, 60%. And not just the government side, but also the commercial side with companies like Google and GE Aerospace. That business grew 82%. Last quarter grew 73, 46. Like it's insane growth and it's beating all analyst expectations. And this is the net income projections. Analysts expected 460, they did 609. So no wonder they're just going up so much and have such a high multiple because they're beating on expectations every quarter. They're having this positive momentum for a reason. Organic revenue, like not from an acquisition, just organic revenue is up 70%. Net income's up 700% to a record net income, a record revenue, record free cash flow. And the huge cherry on, they have no debt. They literally are debt free. So the only bad part is they're expensive at 117 times next year's net income, but they deserve an expensive multiple. Palantir secures 300 million USDA contract. Palantir selected by the FAA. That's insane. So yeah. Congrats if you own that one. Next up, hey, thanks, Plasma. Dude, Plasma, dang, with the huge hand heart. Dude, thanks so much, Plasma. I really appreciate that. Hey, thanks. Data storage stocks. I know there's like PSTG, they actually changed their name from Pure Storage to Everpure. Huh. And it won't even, okay, interesting there. Okay, happy Earth Day. Oh, it's today Earth Day? I didn't even know that. All right, oh, hey. Let's see here. Next up, what about Campbell's company? Are you talking about Campbell's Soup? Majestic said XE stock. Let me find XE Energy. Is this the stock that Amazon owns? I forget. All right, let me actually check that out. Oh, it is. Actually, wow, it is. Look at that. So Amazon owns 24% of all the shares. Amazon is the largest shareholder. They literally just IPO'd. And they're up good on their investments. So they're now an $11.5 billion company. I wish I could give you more thoughts on this stock right here, but what do they do? So the firm focuses on modular nuclear reactors. So this could be like a mini SMR play, mini nuclear play as well if they can do this successfully. A commercial scale advanced SMR. If y'all didn't know though, there's only 2 working SMRs in the world, which stands for small modular reactors, and neither of them are in the US. So it's a tough one, but interesting there. It's good that they're Amazon backed. That's actually really cool. Let me pull up Amazon stock. I wonder if there's any specific news around that one. Yeah, X Energy completes a $1 billion NASDAQ IPO as Amazon as the largest shareholder. So Amazon has committed 5 gigawatts of nuclear power orders. So a bunch of orders if they can fulfill them. They reported 400 million of losses, with 109 mil of revenue. So they do have 109 mil of revenue. And their first reactor at Dow Chemical's Texas facility expects regulatory approval anticipated in the early 2030s. This is what I'm talking about. This is like a very long time away. Their first nuclear reactor approval is coming in the early 2030s. So that's like, it's a bit of a while away. That's why, SMR is an impossible buy, or it's a really hard buy. Oklo you can't buy it. So if you want real nuclear exposure, like right now nuclear exposure, check out CEG, which right now today already owns 30% of all the US's nuclear reactors active right now. Pretty cool. So, all right, hey dude, try not to spam there, man. That's not cool there, Facts. Hold on. Sorry, I gotta mute you, bro. This is why I gotta read the chat more. Sorry. Actually, we're not gonna do that one. We'll come back to that one. I saw Luffy said Roblox. Let's do Roblox and then we'll go back to that one. Okay. Actually, that's a big. Actually, is it in Kathy Wood's portfolio anymore? Here's Kathy Wood's account. Yeah, Roblox isn't in her top 10 anymore. Well, let's pull up Roblox stock right here. This one, unfortunately, just can't get net income positive. That's the only thing that scares me. Their daily active users are growing like crazy. Their free cash flow is good, but it's a net income stock-based comp issue that makes this a very hard buy, despite good growth. What app is this? Yeah, hey, this is a brokerage where you buy stocks on. If you want to get this app I'm on right now, it's in my link tree, the very first link on my bio. So anyway, check out Roblox. This is what I'm saying. Impressive revenue growth, organic revenue. It is up 43%. Last quarter grew 47, but they are very leveraged. They have a lot of debt, $9 billion of debt. and they're losing more and more net income. So the same time last year, they lost 220 mil in net income. Now they lost 320. They're losing well over $1 billion in net income a year. This is where it starts to get tough because for all of time since Roblox's IPO, they've just lost hundreds of millions, and cumulative, they've lost billions in net income. They are super, super far away from profitability, and I just don't like owning stocks that are like, it's tough when they're that far away from profitability. I guess, the people on Roblox, I guess kids don't have credit cards or something. I don't know how they're making profits, but yeah, here are their daily active users. This is the impressive part as well. Daily active users are at 144 mil, when the same time last year, the daily active users were at 85 mil. So I guess, I don't know if that's propped up on AI bots or something, but that really is impressive user metric growth, but it's a profitability issue that makes it a very tough buy. Hey, what's up, Joe? KO earnings. Yeah, dude, insane earnings this week. Y'all won't believe this. I'll be super quick about this, but specifically Wednesday, this is actually like the biggest week I've like literally ever seen in the market ever. Google, Microsoft, Amazon, Meta, all at the same time, all on Wednesday. That's going to be insane. Same with we get AbbVie, Amphenol, Qualcomm, Chipotle, a bunch SoFi. That's all just Wednesday. Not even talking about the other days where we get crazy other big earnings. So like we get Apple on third. So anyway, this week is huge. So get ready for some volatility. I wouldn't get your cash ready just in case, don't spend everything right now. So actually, let me do Coca-Cola. Then let's do ServiceNow. ServiceNow is next. I got you. What's up? Where's the cookies? Yeah, we'll do ServiceNow. I got you. Then we'll do BN and some of these other ones. So next up, I just lost. Okay, yeah, KO. That's a big Warren Buffett stock. If you go to Warren Buffett's portfolio right here, a lot of people know him for Apple, American Express, and his third largest holding is Coca-Cola. It's 10% of his entire portfolio. This has been a phenomenal dividend growth company. Basically, every year, no matter what, you're getting close to 3% of your money back in a qualified dividend. So you get 3% of your money back, and usually around 3 to 4% stock price appreciation on top of that. It's like 6 to 7% of returns a year. That does not beat the tech-heavy S&P 500. So don't buy the stock expecting to outperform the tech-heavy S&P 500. You kind of just buy it for its natural defense to just always go up like 7% a year. The valuation isn't expensive, a 24 forward PE, so only trading at 24 times net income. They sell the syrups to the bottling facilities for a high margin. I actually own the Coca-Cola bottler. I own Coca-Cola Consolidated, but yeah, here's their net income every quarter. 2.5 to 4 billion in net income a quarter, running at close to 25 to 30% net margins. And a lot of people, or someone was saying the other day, like, hey, I don't drink Coca-Cola anymore. I don't really like Coca-Cola. I don't know how they're still doing good. Well, they don't just sell Coca-Cola. Check this out. These are all the brands that they own. Yeah, I bet you've heard a lot of these like Sprite, Smart Water, Minute Maid, Body Armor. I love Body Armor. Fairlife Chocolate Milk, Vitamin Water, Gold Peak Tea, Ginger Ale, Monster Energy, Powerade, Fanta, Topo Chico. I love Topo Chico. So I just love their family of brands. And so I actually own not the main Coca-Cola company, but the Coca-Cola bottler. I'm a big fan of both though. If these beverages are going nowhere, to compete with Coca, it's like the most competitive industry ever. And they're the winners. They're the winners. So, yeah, and I guess Warren Buffett approved there. Warren Buffett owns 10% of the shares. So, yeah. Next up, yeah, I said I'd get to ServiceNow or BN. I think Brooke, we already did ServiceNow twice. So this will be like the last time we covered. This is one of the software companies that it's not just ServiceNow that's falling really bad right now. If you look at even Microsoft or an Adobe or a Salesforce, they all have a very similar looking chart because this is like a pure software play. And if they're saying AI is going to replace software, but that wasn't reflected in their numbers. They had great subscription revenue. So their subscription revenue increased 22% to $3.67 billion. Analyst and I love subscription model companies. It's all reoccurring. It's predictable. And they just acquired Armis, which is for $7 billion, a cybersecurity company. And that's a specific sector where I'm more, like, I don't think AI is going to replace cybersecurity. Like I could maybe see AI replacing Adobe and replacing Duolingo, but not so much a huge cybersecurity company that half the S&P 500 use. You know what I'm talking about? So yeah, they're already profitable. They're making over 500 million net income a quarter. And this is what you want to see. If you're going to diamond hand a stock, you just want to see revenue just slowly hit a new record every quarter. And the revenue growth is going to continue to pick up even faster with their new 2 acquisitions, with Workflow and Armis acquisition. But there is one bad news, and this is the one thing I'd be careful with. The forward PE might still be able to go down. Like, look at this. The forward PE, even though they've dipped, is still a little pricey at a 41. The one scary part is this could maybe even fall down to like a 35 forward PE or a 37 forward PE, still fall another 10 to 15%. So that's the one bad part I'd be careful of. That's why now is not the time to go all in. It might be a decent dollar cost average, like a nibble. You nibble on the position, but you don't go all in yet. Like if you wanted them as 5% of your portfolio, don't make it 5% today, maybe 1%. Core Power is tough. Yeah. Core Power, we have some of that. It's like a protein chocolate milk workout drink. Next up, BN. I think this is Brookfield. Yeah, this is, they're like, look at this. There's BN, Brookfield, and there's Brookfield Asset Management. So I got to remember the difference between the two because I think this is like still a PE company. Yeah, like private equity. And then asset management is 20% of the revenue. Infrastructure, renewable power. So I think this one is also an asset manager. Let me kind of go over here. So yeah, asset management is the industry. You get a good growth, I guess, a 0.5% dividend yield. What's the valuation? So Brookfield trades at, there is no forward PE. Do analysts just not cover this one? That is weird. Yeah, and there is no S&P Global analyst. Huh. So no analysts are really covering this one, but here's what they just reported. So I guess the revenue kind of has fallen from the previous year. Like it was much higher in 2023. Now it's kind of fallen this year, but still really profitable, still making good net income every quarter. If I'm looking for a private equity business, I do like BlackRock better, but they've had great appreciation, like pretty much all-time high, and this stock has actually held up better than BlackRock. So, I don't know. I wish I gave you more thoughts, but again, we don't have that forward PE. So I guess Morningstar doesn't cover this one either. Yeah, we do not expect this company material. Okay, well, I don't know. Morningstar doesn't cover it, so sorry. Pure Storage changes ticker symbol to P. Oh, Everpure. Okay, yeah. Interesting there. And that's another subscription model company. I do like that one. DOW, you're talking about Dow Chemical. This one is like a chemicals commodity stock. Historically, not one you really want to own. Dow is the same price that it was in 1999. But one of the main reasons you own them is for the dividend. You get basically 5% of your money back in a dividend every year. But it's the trade-off. Like you get 4.5% in a dividend, but like no real stock price appreciation on average. So it's like a specialty chemical business. Yeah, chemicals industry. Packaging, like plastics. You know what I'm talking about? Like nothing too sexy of a sector. I like Solstice as a better specialty chemical company. Next up, hey, no way. Hey, Jack said happy birthday. Hey, I appreciate you. Yeah, today's my birthday. I appreciate that. Thank you. Any cheaper stocks? At the beginning of the stream, this is what we really covered. One of my favorite stocks to buy right now is AbbVie. It's a healthcare stock at a 22 forward PE and a 3.5% dividend. Progressive Corp is another one. I'm not just recommending these because they're not at all-time highs. I'm recommending these because they have good fundamentals. Like historically, Progressive has always just done amazing in stock price appreciation. So I decided to finally buy the stock after it's already gone up so much, but it is kind of on a downtrend this past year. They pay cool dividends as well. But yeah, here's actually all my most recent purchases in order if anyone's curious. My most recent purchase is Ouster, and these are all 3 weeks ago or less. I bought Uber, Microsoft, and AppLovin all 3 weeks ago. So yeah, these are all my most recent positions. My oldest position is UiPath and Zoom. Been diamond handing these for a long time. Okay. I love being fully transparent. You got any questions for me? Let me know. I'll share with you my all-time performance, everything you want to see. Hey, thanks, Matt. Can you do Vias? Hey, give me the ticker symbol. Yeah, if you have a stock you want to look at, Angel, please give me that ticker symbol. All right, you know what? I got you. I'll type it in for you. VISAX. Yeah, see, I typed in the name of that stock, and this is why I can't find it. I typed in the name you said, though. Lumentum. Yeah, hey, if you have Lumentum email, give me the ticker symbol for that one. We'll check it out. What about Domino? Buffett bought it, high debt. Yeah, Domino's Pizza. Yeah, here's the Warren Buffett portfolio. Let's go to his most recent changes. So he actually he didn't sell out of any companies. He just bought New York Times. So yeah, actually that was his most recent addition, he bought, wow, 300,000 shares of Domino's Pizza. So it's kind of like a McDonald's competitor. Well, not competitor, but a McDonald's type business model where all the franchises pay a fee back to the parent company. So they're basically collecting high margin royalties on all the franchises. But if you look at any restaurant stock right now, they've been struggling. This stock is the same price it was in 2020. Don't look at Wendy's. Dang. So Wendy's stock is lower than it was in 2008. RIP Jack in the Box, Krispy Kreme's at all time lows. So the whole restaurant industry, and same with Chipotle, Sweet Green. Ooh. So the whole food, I don't know if it's just from Ozempic or it's just the whole industry, but yeah, food is a tough industry right now. And it looks like consumers are really looking for value menus. So here's their number of stores. They have 22.14K stores. I actually heard they're having a tough time basically expanding international because like people in China just like would rather support local than a corporation or something like that. I don't know. But yeah, they have this isn't a worry of a balance sheet. I guess they should be able to pay off all their debt within like 4 years, I believe, the debt to EBITDA ratio. So, I don't know about Domino's Pizza. I'd rather buy McDonald's because I understand it better. But yeah, they're in an 18 forward PE. Not too bad. Pizza play. What game is this? Or we're looking at stocks right now. All right, next up. Will Intel go higher? I don't know. I would not buy Intel at all-time highs. Campbell Soup. Okay, let me do Campbell Soup. I saw that one, and then we'll do LITE, some of these other ones. So the Campbell Soup, yeah, another kind of food company. They sell all the cans of soup. They own Goldfish. Let me actually see all the brands that they own. Maybe we can find like a family of brands kind of. Yeah, here they are. They, Goldfish, Oops. I just recently tried these. They're really not that good. I tried to like them, but the like Milano things. Oh, I love V8 juice. So anyway, these must be like their main sellers. But let's go check out how they're doing. So again, all food stocks are kind of struggling. So yeah, if we go to the revenue, the lifeblood of the company, the sales fell 5% year over year. So the sales are down 5% and the profits are down 22. So yeah, that is a little margin compression. So gross margins are down 8%, net margins are down 2. So but they traded like 9 times net income. Yeah, literally 9.6 times next year's net income. Like that's just such a cheap valuation. And again, if we look at the stock right here, it's like straight down. It's not just Campbell Soup. Look at GIS, General Mills. General Mills also almost an identical looking downtrend. So this is another one I really like. I actually trust this one a slight bit more because they're more diversified into more brands and names that I like. Here, oh look, it breaks it down. Snacks, cereal, convenient meals, pet food, dough, baking mixes. So yeah, they own like Pillsbury dough. I want to all brands. Yeah, I want to see explore all brands. So here's General Mills. Maybe this one could just be like a safer. Annie's, like the healthy stuff right there. Oh dang. They have it in like order, like Chex, Cheerios, Cinnamon Toast Crunch, Cookie Crisp. I know all these brands right here. Show all brands. Yeah, I want to see them all. Haagen-Dazs, no way. Kicks, like Lucky Charms. So definitely a lot. Yeah, Pillsbury dough. This one might just be a slightly safer buy. I don't know. There you go. But yeah, the whole industry is kind of being crushed right now. But they have good dividends too. General Mills, 8 forward PE, 7% dividend yield. What was Campbell Soup's CPG? Honestly, I would really just like put a little bit amount of money in like these food stocks. Like I wouldn't. It probably isn't a bad time at like 9 times net income. And I heard General Mills is like splitting off one of their lower margin businesses too. All right, next up. Okay, yeah, I'm really behind here. Yeah, hey, what is Cheetah Net Supply? Please give me the ticker symbol. Think Google and Microsoft earnings are going to be good? I do think so. I really do. Just with AI and stuff and the cloud. I think both Google Cloud, Azure Cloud, they're going to beat on their cloud projections. Google commits $40 billion investment into Anthropic because they gave like a $10 billion cloud order. Google owns Gemini. Google's an ETF in one, with the Google Cloud, YouTube, quantum chips, autonomous driving cars, AI. So anyway, drones. But let me know if you want me to deep dive into them. So let's do light right here. LITE, NVIDIA just bought this stock. NVIDIA is wanting their complex, I guess they do like fiber optics and basically like complex electrical infrastructure solutions. Like I think they do like the copper cables as well, maybe. I don't know. But let's see. And look, NVIDIA invests $2 billion into Lumentum. So literally NVIDIA bought $2 billion of this company with a long-term supply agreement for optical interconnect technology. Yeah, so that interconnect solutions, optical fiber, stuff like that. So basically a nice little AI infrastructure play. So the future projections are just up and to the right. Revenue is supposed to hit $920 million in 2 quarters. If we zoom out right now, it's never even been close to $900 million before. In every quarter, the past 3 quarters, it's just hit a new record. So it's going from $600 million this quarter to 200 in 2 quarters to $900 million. And on that $900 million, they're going to make $170 million in net income. So they're going to have a crazy margin on that. So that's why this stock is, what's the forward multiple? So they traded 255 times net income, but you really want to do a forward multiple, and that jumps way down to only a 79 forward PE, which is still really expensive, but you really want to do like, because of the growth that they have, like a 2 or 3 year out forward PE could potentially only be trading at like 30 times 2 years out, something like that. Still not one I'd buy at all-time highs, but I can see why the momentum has been so positive with the investment from NVIDIA and a long-term agreement shows they have some real good products. And NVIDIA does that all the time. NVIDIA, here's the actual NVIDIA portfolio. It hasn't updated yet because it'll show up on the next quarterly release. But here's currently NVIDIA's portfolio. They own a bunch of Intel, which, they got to be up crazy on the Intel investment. They just hit an all-time high. Yeah, they own Synopsys, Nokia, Nebius. So anyway. Next up, what's up, Jack? Hey, thanks again. He said BKH, and I'm behind on the stocks, so I do apologize if I'm missing out on some of these stocks here. Hey, what's up? Millionaire, what's up, dude? What do you think of RCSC? Yeah, remind me to get to that one. We'll check it out. So Black Hills Corp. I think this is like a tool company, but I have no clue. This stock is the same price that it was in 2019. So the stock has been flat for a long time. So they're actually a utility company, a gas utility. Okay, so I guess their website's not going to work for us. Okay. The gas utility provides natural gas in Arkansas, Colorado. So basically, they're a regulated utility, so they must have a good yield. Yeah, 3.65% dividend yield, a 16 forward PE, gas utility, electric utility. The only times when, I noticed this one has underperformed a bunch. The only thing I can, I'm missing some sort of news. They had to, they had to replace a bunch of lines in Chicago or something. That's a huge thing hurting Exelon and a bunch of other utility stocks right now. It's having to replace a bunch of the old piping and infrastructure. So I don't know if that's why this one is this one has done really bad for a utility. I own a regulated utility, Southern Company. Just bought them. This one I almost like more. Actually, I do like more, but this one's had much better stock price appreciation. If I could get it to load here. Guess my Wi-Fi is being slow here. I apologize. But yeah, look at this Southern Company. This is the regulated utility that I like. They have only a 20 forward PE, almost the same valuation, a 20 forward PE, a 3.3% dividend yield. Another ETF I like is just the VPU. I want exposure to the companies that are powering data centers because we know that data centers are very power hungry. How do we get exposure to the companies powering them? Well, VPU is a phenomenal way. It's historically, even before AI was ever a thing, this ETF always gives you 7 to 8% of your money back a year because of how electricity just grows 1.5% every year. And electricity demand is only going up because of AI. And also they're mostly regulated utilities. If you didn't know, if they don't make a profit, if these regulated utilities literally don't make a profit, the government guarantees them some, depending on the municipality and the government, state and stuff. But they get guaranteed returns like Southern Company does. If they don't make money. So they're just great investments that give great yearly returns. This past year they've kind of outperformed, but you probably won't outperform the S&P 500 in the long run, but it's just a good sector to invest in because it's so defensive and safe and you get a good yield. High yielding ETF too. What happened to P stock? Everpure, this one is just what happened to it? They changed their ticker symbol. I don't know. This is a basically subscription model company. Half of their business is doing good. The other half isn't doing so well. Like, yeah, their subscription and services revenue, this has done great. Like, if you notice the annual trend here, it just hits a record every single year. So that's what you want to see there. Up 14% after grew 17, after grew 25, after grew 22. But their other business, like the actual battery storage, I guess, actually, that one also grew 25%. Shows they've actually picked up the growth. That's great news. Yeah, if we zoom out, I mean, that's what you want to see. The revenue actually hit a record this quarter. So record revenue and also record net income. So interesting there. They're just super expensive. 80 times forward PE, that's just like really expensive. Doritos is working on a recipe to make it combat the effects of Ozempic. That's kind of cool. Pepsi's working on a Dorito recipe to make it combat effects, or I don't know. Okay, combat to make people want to eat more. Is that what you mean, or I don't know? But yeah, Pepsi has a 3.66% dividend yield. They have so many great brands. Like they own Popcorners, actually, Lay's, and all the Lay's brands. They don't just sell food. Nah, you're not getting my cookies. Yeah, they just like changed the packaging on some of the things. Yeah, let's see. Oh, here's all their brands, I guess. Lipton tea, I like that stuff. Food, I guess Tostinos, Lay's, Quaker Oats, Doritos, Cheetos. Yeah. Actually, they just bought this company last year. Featured. Okay, anyway, I don't know what I'm doing in here. But anyway, that's another cool food company. Pepsi and Coca-Cola, those two have held up a lot better than like a General Mills. Hey, what's up, Happy? Good to see you. Thanks for those gifts there. Dude, for the 6 roses, I appreciate that. If you got a stock you may look at, let me know they're happy. I really appreciate you. GEV. Oh, I forgot to get to SoFi a long time ago. Let me do SoFi. Yeah. What is this app, by the way? Yeah, hey, if you want to get this app I'm on, it's actually a brokerage. It's called Moomoo. If you'd like to use my affiliate link, it's in the link tree. It's in my link tree. It's the very first link there. So yeah, it's a brokerage called Moomoo. My favorite app to buy. It's a brokerage where you buy stocks on, and my favorite one to analyze stocks on too. Free, cost nothing. So anyway, here's SoFi right here. I do own SoFi, so full disclosure, I'm totally biased, but I own them because they're so growthy. They're a fintech. They got their own banking charter. And check this out. Specifically, the metric you want to look at to judge their growth is their financial services business. And check this out. It's up 78%, after grew 85, after grew 115, after grew 290. It literally hits a record every quarter. No analyst expected it to be this growthy. They were expecting like a 50 to 60% CAGR, but not a 70 to 100% CAGR every quarter. And we could see the analyst projections. That's the orange line down here. They beat on expectations every quarter. And the expectations are only up and to the right. They're supposed to make 200 mil of after-tax net income next quarter. No wonder people are starting to take SoFi seriously. So they're going to be making 200 mil of after-tax net income a quarter, and the revenue just hits a new record literally every quarter. So, that's why I own this one. And they're a slight bit pricey at current prices. Actually, not really. A 28 forward PE. So this is a growth company. You obviously want to judge them off next year's net income and not right now's net income. So they trade at 50 or 47 times right now's net income, but only 28 times next year's. So it starts to look a lot more reasonable, a lot more attractive. All right. Can you're so welcome. Happy birthday. Hey, thanks, Happy. Thanks so much. Coffee said Groupon. No way. GPRN. I forgot about that. GRPN. Wait. Is that Groupon stock? Okay, we found it. So Groupon, how are they doing? Not too well. Did they make money? Guess let's go find out. So net income. So here's the revenue. First of all, that's kind of not what you want to see. Revenue in 2016, they were doing like 600 to a billion of revenue a quarter. Now they're only doing like 100 mil of revenue a quarter. So revenue has definitely declined, but yeah, they're really choppy with the net income. Technically, they're making a few million of net income a quarter, but this is a before interest number. And I noticed they have more debt than assets. So the after-tax net income numbers sometimes gets choppy. I'd be careful with this one right here. Nothing's really blown me away. That balance sheet especially, they used to have more assets and liabilities, now more liabilities than assets. And how are they going to pay off, 700 mil of debt when, yikes. So not one that's really blowing me away here. Yeah, I wouldn't really touch that one, unfortunately. Hypothetically speaking, are donations ideally done on YouTube or TikTok? Well, ideally neither, because both take a 33% fee. So, If you want, I have a PayPal in my link tree, but I don't want to. Okay. Well, let's see. What do you think about Webull with the recent news? Oh yeah, Webull stocks. Well, I don't know what the recent news around Webull is. Oh, unless you're talking about the SEC removal. Okay, so Robinhood trading halted. What does that mean? Uh, Okay, well, anyway, I do on Webull, and I use Webull as a platform. So here's the Webull app right here, and I have a brokerage of them. I'm up 20% all the time, and I am just more bullish than the analysts are on Webull because of what I've seen them doing. They just added in crypto to the app for the first time right after they IPO'd, and they also just added in prediction markets to the app. And according to Robinhood's margins, it's super profitable to do prediction market and option and crypto contracts. So, or just crypto trading to offer that. It's a high margin segment where you collect the high margin fees. So that's why I'm more bullish than the analysts are on Webull. And the SEC just removed like the pattern day trading rule, and that's going to send trading volume just up for this company. Morningstar says they're undervalued, robust revenue expansion. Okay, so here are the actual analyst projections. They're supposed to make net income from now on, 15 mil next quarter, 18 mil the quarter after, but I think they're going to make more. So yeah. Let's see what's next here. Picked up SoFi options. Oh, dang. Well, I'd like just holding shares. Oh, the 100 million of buybacks. Yeah, Webull is doing some share buybacks. Vistra Energy Corp. VRT. Wait, is that? I see VRT and Vistra. So there's Vertiv and Vistra. Saw both of those back to back. I mean, I don't know which one to cover here. I guess we'll just do VRT. This is a data center cooling company. They sell cooling pumps to data centers. They do water cooling. Vertiv accelerates capacity expansion to meet data center market demand. So, and backlog doubling to 15 billion. Dang, so their backlog doubled, and the whole backlog is 15 billion, and the company's worth 125 billion. So when your backlog doubles, that's just like so much future long-term stability when you're booked out for years to come. And yeah, the net income projections are so good. Net income's going to be 630 million in 2 quarters. If we zoom out, it's never even been close to 600 million before. I mean, it's already at a record. Like if you zoom out, record net income already, and it's supposed to just continue to climb higher. So yeah, congrats if you own this company. I really wouldn't trim or sell this one. It is certainly expensive, so you can't really buy it today, but it's a stock you just want to buy and hold forever. They remind me of like a Comfort Systems as well. The company's doing the complex cooling for the data centers. I'm a big fan of that whole industry. So actually, they're on my new watch list. I made an HVAC watch list. So yeah, I got Vertiv on there, Train Technologies, MCore, Madison Air, which just IPO'd, Comfort Systems. I just like that whole industry. Had 50K in SoFi and they treated me like trash. Oh, that sucks, man. After their customer service, dang. Yeah. I've done that with Apple before. They're like, Apple's customer service is so trash. Time to sell Apple stock. I know what you mean. This has been a solid stream. Hey, thanks, Plasma. Mike, what's up? Mike Murphy said INT stock. Are you talking about Intel, or I typed in INT? I can't find that one. Your take on Asia Metals, is that a ticker symbol? Or give me yeah, Alex, or if you have a stock you can look at, give me the ticker symbol, not the name of it, and we can check it out. Let me do CPA. You getting CPA? Let's see what this one is. Okay, it's Copa Holdings. So they're an airline industry, air transportation. I'm not a big fan of the airline industry. That includes cargo and mail revenue. So they are actually making consistent net income. That's actually great news. If you go to a lot of airline stocks like United Airlines, Southwest, Spirit, like the net income is so choppy. Actually, Spirit went bankrupt. But the net income is so choppy. Like they make net income, then lose money. But this one actually consistently makes 180 mil in net income, like, or just consistently makes net income every quarter, which is phenomenal news. Usually these air stocks are usually very recession prone. You get a good yield, actually. Wow, a 5.5% dividend yield. Headquartered in Panama City. Interesting. So where does the revenue come from? So North America, South America, Central America. So interesting, I guess, airport. Definitely one of the better, like maybe they own the airport. Definitely one of the airport companies. What app is that? Yeah, hey, Mark, bet. This is a brokerage. If you'd like to get this app I'm on, it's actually a brokerage software where you buy stocks on. It's in my link tree. It's the very first link in my link tree if you'd like to get this app. It's also an affiliate link, so if you go and like deposit $100, we'll both get like a free stock, but you could just type it into Google, broker called Moomoo. Yeah, it's in my link tree, first link. Next up here, yeah, no problem. I saw Micron. Yeah, hey, I saw people asking about Micron. Well, I'll be quick about this one because we've already covered it, but basically this stock is pricing in the future growth. This is your memory shortage play, and check out the future projections from the analyst. Net income is going to go from 13 billion this quarter to 22 billion next quarter, and then 25 billion in net income the quarter after, and it's supposed to be 30 billion the quarter after. So they're going to be doing 100 billion of annual net income. And the whole company is worth 560 billion. So that literally means they only trade at 5.4 times next year's net income. Like, that's where the valuation can easily stretch up. Like, I feel like this forward PE of a 5.4 could easily go up to like an 8.4. So that's why if I was a shareholder, I really would not trim or sell out of Micron. I think it's just going to slowly kind of climb up higher because that forward PE is kind of cheap. So, you don't like car and HVAC industry? Wait, CARR? Carrier Global. Let's see. Wait, were they on my, or you're saying add them to my HVAC watch list? Let's check it out. Actually, they're on my watch list. I just, if I'm missing any HVAC stocks and I also have an electrical infrastructure watch list, yeah, let me know. I'll add it to the watch list. Let's analyze it. So Carrier Global right here. Let's see what they do. So Climate Solutions, yeah, basically HVAC. I love that. So Climate Solutions Europe, and cool. So let's see how they're doing financially. So the revenue actually fell, Revenue is down 6% year over year, which is counterintuitive because all the other HVAC stocks like MCore, Comfort Systems, they're all doing really good right now. But the lifeblood of the company, the revenue is actually down 6% year over year, and the profits on that actually fell 85%. That's very weird. Was that a one-time adjustment or I don't know? Record cash flow, but something happened to their actual profits. Like the basic gross margin metric fell 23%. So that might be one thing to watch. That might be why they gapped down right here on earnings. Yeah, they gapped down on earnings day. So, that might be one thing to watch. But I'm a big fan of this industry. I clicked on their website. Oh, I thought that was the Ford logo. Carrier Global residential. So maybe if I had to guess, Comfort Systems, 80% of the revenue comes from commercial customers and not residential. Maybe this company is highly concentrated in commercial customers, or I mean residential, and that's what's struggling right now. Like even for Comfort Systems, the residential revenue is down 20%, but all their other businesses like data centers and healthcare are growing like crazy. So cool. What's the valuation on this one? So a 35 PE and a 29 forward PE. But yeah, we just want to make sure the growth comes back to the revenue. Like we don't want to see negative sales growth like that. That might be why that one's that is the reason why they're underperforming all the other ones. Hey, what's up, James? I'm about 85% putting into view. Oh yeah, that's smart. That's what I did. Like whenever you make crazy gains on a stock, like from an option contract or something, just park it in something safe or a good growth stock. All right, next up here. Yeah, we'll look at, dang, we've been streaming for over 2 hours now. We'll look at a few more stocks and then I got to get out of here. I've been having fun though. I literally wasn't going to stream today. Today's my birthday. I wasn't going to stream, but I literally felt bad and I was like sad. I'm like, I wanted to stream. So this has been fun. I appreciate everyone that's here. We'll definitely check out a couple more here before I get out of here. A Red Cat. Yeah, what's up, Steven? And we'll do Spotify. What's up, Alex? The link tree is missing on your YouTube page. It's actually in the link in the description. Also have it in the chat, but I think it's in the description of the YouTube chat. But maybe I don't have it. Thanks for saying that. So here's Red Cat Holdings. This is a drone company. They're actually selling a bunch of their Black Widow drones to to other NATO members right now. Their Black Widow drone already got NATO approval. Let's see if we can figure out any specific news on this one. So defense contract deliveries rose 315%, accounting for 72% of total revenue. Manufacturing capacity expanded 520%, targeting 1,000 drone units monthly with new unmanned surface vessel products introduced. So yeah, 1,000 drone units a month. Operating losses widened. So yeah, they're still not profitable yet, but let's check out how they're doing. It's basically the future growth you want to look at. So revenue is going to go from literally 3 million to 28 million. So the business is basically, a year ago you were buying a company that did 20 million or like 15 million of revenue a year. Now they're going to be doing over 130 million of revenue a year. The analysts are right, and they're probably going to beat on expectations. So anyway, interesting drone play with the fortress balance sheet. Literally no debt at all. 167 mil of cash. So they can afford to burn, 15, 20 mil a quarter. We definitely want to see them narrow the losses though. Do they plan that? Yes, they're only supposed to lose 13 mil for the next 2 quarters. So that's decent at least. So they have a couple years of cash left before they have to dilute or anything. But anyway, hopefully the revenue will grow so fast from these new drone orders. So still one you don't want to really trust is like a huge size position. You want to keep as a small size position. Hey, thanks, Sonia. Yeah, thanks for all the birthday wishes. I really appreciate y'all. Hey, thanks, Alien, Yesy. Thank y'all. And Mike, Mayan, thank you. What was it I wanted to look at next here? Oh yeah, Spotify was it? Yeah, Spotify real quick. Spotify, this is a cool subscription model company. There's just a lot of increased competition from, I used to pay for Spotify, then I switched to Apple Music because it was free. It came with my phone, and then I switched to YouTube Music because the only subscription I basically pay for is YouTube Premium, and it comes with YouTube Music. And YouTube Music is an exact replica clone of Spotify. And it has more music selections. And the tough part about Spotify is, and I was reading a thing about this, is basically whenever Spotify raises prices, the music creators go to them and say, hey, we're actually going to take our music off your platform if you don't pay us more. And, kind of Spotify needs Taylor Swift and Avicii and a lot of these music artists more than kind of Spotify, or than they need Spotify. So that's one thing that's kind of a future thing hurting them. But they have a ton of premium subscribers. Check this out. They have 290 million premium subscribers, up from 263 million. It's cool data, up from 260. Great premium subscriber growth. They also have 476 million ad-supported users. And I heard they just made their ad-supported tier a lot better for free users. But check out this right here. Record profitability. They are the most profitable they've ever been. This quarter specifically, insane profitability, and with free cash flow, record free cash flow, record net income, record everything on Spotify. They are a little pricey though. Even though they've come down a little bit off their peak, they still trade at a 33 forward PE. But they do have a ton of premium subscribers. I almost think Netflix is a better buy. I feel like more people would cancel Spotify before they canceled Netflix, but I don't know. And I just personally, I know like it almost seems commoditized. Like YouTube Music does the same, Apple Music does the same, and my brother has this like App Store app that like you can get any music for free, but you have to like download it. I don't know. Yeah, they're getting into podcast. I hear. Best dividend stocks you recommend? Well, hey, yeah, actually, you probably want some decent yields on the actual stocks. But yeah, my favorite higher yielding stocks, dividend stocks to buy right now would be an AbbVie, ABBV. If you buy it right now, you get 3.5% of your money back. And also Progressive Corp. This one doesn't have a super high yield right now. It only has a 0.2% dividend yield, but they do a special dividend every January. You see the second line, it says special dividend. I love when the companies do that. It was a $13 special dividend. And the same time last January, it was a $4.50 special dividend. The January before that, it was 75 cents. So they're actually, the reason they're paying out more in special dividends is because they're the most profitable they've ever been. I mean, look at the net income. It used to be kind of choppy down here, 2022, sometimes they were losing net income. But now it's like $3 billion in net income a quarter. So it's not like Progressive stock is falling because the profits are down. It's kind of just the whole insurance industry. I don't know, they're saying maybe like robo-taxis will make car insurance irrelevant, but that's so far away. Like, I don't know. So that's just a cool insurance company if you like that one. Oh yeah, TEL dipped on earnings, worth a nibble. Let's check it out. TE Connectivity. Wait, on earnings. So you're right, they did report earnings 3 days ago. Let's see what the actual earnings were. Then we'll look at HYMC and a couple more. I'm going to trade Microsoft. Hey, what's up, Mr. H, dude? Thanks for that rose there. Yeah, Microsoft is great. Actually, next week is going to be extremely volatile. We have Microsoft, Amazon, Google, and Meta on the same time on Wednesday earnings. Ton of earnings this week. I think Apple is this week as well. Visa, Caterpillar, like SoFi, I can name a million names. It's one of the craziest weeks I've like literally ever seen in the market for earnings. But yeah, here's TE Connectivity. It's like a data center beneficiary from their industrial solutions right here. This has been the real growth driver. They just reported earnings 3 days ago, so this doesn't include their most recent data, but this does right here. They actually slightly missed on their revenue. So revenue slightly missed, but they beat on net income. Look at that. So they expected 740, they did 850. They beat on EPS. Oh, but it was I'm assuming this was a one-time adjustment or something because they they slightly missed on EBITDA, but they beat on net income. So maybe there was a slight one-time adjustment. Um, okay, but anyway, yeah, I mean, before tax was 970, after tax was 855. So last time, like last quarter, the profit. So actually, their earnings are only overstated by like $80 million for that, which is no big deal. So yeah, they really only traded an 18 forward PE. So yeah, they traded 19 times forward PE. Maybe they just slightly went down because they didn't beat on growth expectations, and the market wants you to beat on earnings. You get a good yield though, a 1.3% dividend yield. It's not like this is some game-changing earnings. Like, nah, they still print money every quarter. 855 mil after tax, like basically record profitability this quarter. So yeah, nice. TE connectivity, 19 forward PE. HYMC. Let me turn off my fan. Okay. So, Hycoft Mining. I think this is a gold stock, if I remember correctly, or let's just go check it out. They own a bunch of mines in the gold industry. Yeah, so they own a bunch of gold mines. The Hycoft Mine. Okay, do they have revenue right now? So they don't. The last time they ever reported revenue was in 2022. So they haven't sold a single dollar, have had a single dollar of revenue since the year 2022. And all they've, and see, here's the 2025 data. And all they've done since 2022 is like lose net income every quarter. But I'm assuming they're going up so much because some successful result from the mine. Like they finally extracted a bunch of gold and they're finally about to go sell it on the market, or it's something like that. And especially, basically, this mine was probably profitable at like a certain level of gold. If y'all notice, the past year of the price of gold is like had its best rally ever. So company is in a robust exploration drill program to unlock a full potential of a 64,000 acre, of which less than 10% has been explored. Cool. So you still got to be super careful. They have no revenue yet. I don't know if this is like the best gold play to buy right now. But yeah, if you just look at the actual commodity of gold, which is IAU, this is how actual gold is done. As we can see, phenomenal. So all the gold mining projects are super profitable because the price of gold is way higher than they like ever expected. I know there's like Denshin Mines. I know there's some DNN right here. Here's like the price of gold next to Denshin Mines. Usually they follow each other. But Denshin Mines right here, or actually, does this one not have revenue either? No, this one doesn't have revenue either. Okay, actually, yeah, careful with this one too. No revenue on Denshin Mines either, but they've done really good. There's a gold stock. I can't remember the company now, but it was a great RGL. Oh, first off, this is the best gold stock right here. This is a royalty company. They deserve all the stock price. If you're looking for a way to get exposure to gold with a dividend, check this out. So first off, you get a 0.72% dividend. Gold doesn't have a dividend. This one gives you a dividend. But check this out. They literally collect royalties. So what is their gross margin? Literally, or net margin actually, I should pull up. I'm assuming they had a one-time adjustment this quarter. Yeah, they did. Really, they made 224 mil. Says they made 93 million. That had to have been, that was a one-time adjustment, totally. So anyway, normally though, they literally have, this is net margin after tax, a 58 to 64% net margin on these gold royalty streams. Pretty cool. But yeah, it looks like they just acquired more royalty streams. Look, last quarter, they spent $1 billion and another 260 million this quarter. They basically acquire gold and royalty rights. So where they're like, hey, we think this area is going to have a lot of gold. Here's money, and we'll just collect royalties every time you sell it and collect it. So yeah, cool little gold play there with the nice yield. Hey, what's up, My Music? Good to see you. Cheers, mate. Have a happy birthday. Hey, thanks, Day Trader. I appreciate you, man. Oh, that's another cool one. Ooh, Matt, he says, are you able to do Taiwan Semi? Yeah, let's do Taiwan Semiconductor right here. They're at an all-time high, like every semi play. NVIDIA's at an all-time high. AMD, ARM, Intel, Texas Instruments. So if you're in any semi stock, congratulations, you're probably up. This one, I think, is just going to continue to climb higher. Do not trim or sell the shares of Taiwan Semiconductor because even at all-time highs, even though the stock looks super pricey, they're not that pricey on a forward multiple. They only trade at 24 times forward PE. That's a cheaper forward PE than Apple, Microsoft, Google, Meta, Amazon. in terms of paying for growth. They're cheaper than all the Mag 7, except for Meta. And they're going to have crazy growth. So they have the number one market share for, they're a fab, they produce the chips. So if you didn't know, NVIDIA, they just design the chips. Apple, they just design their smartphone chips. Taiwan Semi is the one who actually makes the chips and manufactures them. They're the fab play. So they're headquartered in Taiwan, but we've converted the currency to US dollars. In this quarter, they did 35 bill of revenue. And on this 35 bill of revenue, they keep an after-tax net income $21 billion, which means in English, their net margin is a 60%. They're literally collecting basically royalties. 50 to 60% net margin on these is nuts. So you also get a good yield, a 0.8% dividend that they raise every year faster than inflation. So you beat inflation with the stock right here. A 24 forward PE. That's why I feel like this one's just going to continue to stretch higher. So 24 forward PE isn't exactly expensive. And look at the projections. They did 17 billion this quarter, which was a record. They're supposed to do 19 billion. And 22 billion the quarter after. So that's why the forward PE is so cheap. Net income's going from 14 to 22 bill. I mean, it's just like such a good stock. Long fix. Yeah, hey, what's up, James? Yeah. They had phenomenal earnings. They just reported earnings, but I feel like all the earnings beat was already priced in, so the stock fell. But yeah, look at this. Beat on revenue, beat on net income, beat on EPS, beat on EBITDA like crazy. I love Comfort Systems. So next up, what was it? Oh, Steven said DCTH. This is a really cool small cap. One you don't want to own with anything meaningful, but out of all, like if you look at the top right, you see they're only worth 370 million. Out of all the companies worth $370 million, like such a tiny market cap. Ooh, actually, dang, I didn't know this, so I would be careful. Net income is actually supposed to lose. I thought they were going to be making net income from now on. So they're actually supposed to lose 5 mil and 5 mil in net income. That's actually bad. That actually makes me not too happy about this stock right here, because I remember I thought they were just going to make revenue. And so basically this company just 2 years ago went from selling nothing to selling this liver heptazo kit. And I thought they were going to stay net income positive like they were, but they were making a few mil a quarter. Now it looks like, though, unfortunately, they're going to lose 5 mil. So that I don't love. My old thesis used to be, hey, out of all the companies worth 373 mil, I want to buy the company that makes a couple mil in net income a quarter. But because of those losses, there is no forward PE anymore. But another cool thing is the balance sheet. So this does take a lot of risk off the table. They have no debt and 91 million of cash. Remember, the whole company is worth 370 mil, so like 20% of what you're paying is just the cash on hand. But it's the negative net income projections that's rough. Hey, what's up, Rad? Did I miss Cat? Hey, we looked over Cat when you first said it a long time ago on the stream. By the way, I am streaming on YouTube, and you are able to like rewind it and stuff. But maybe we can look at it again. What's up next here? Happy birthday! Hey, thanks, Carlos. And Nest said, OSS. Yeah, hey, I've already looked at ServiceNow like 3 times. That one's been a real popular one today, so I'm not going to cover them again just for the people that have been here. But yeah, if you have another stock you want me to look at, let me know. I got you. So here's One Stop Systems. Okay, I haven't heard of this stock before. Interesting. I like going over stocks I've never seen before. So they just okay. That is that right? Like the revenue went negative. How does revenue go negative? Well, I guess they also lost revenue the same time last year. What industry are they in? Computer hardware. Let's go to their website right here. I guess they're in the defense industry. I guess they got some like funny looking AI pictures here. But here's the products. Okay, so are these like PSUs? Are these like power supply units or something? I don't know, but potentially it's like these components that are going to be used in computers and maybe vehicles. The revenue projections aren't good. That's why I really don't buy this one. I mean, the revenue is going to go from 14 mil. I mean, next quarter it's going to be 6 million and then 8 million the quarter after. I mean, that's just like, there's no growth to the revenue. Revenue is actually supposed to decline year over year by 30%. They're going to lose net income. So yeah, unfortunately, nothing's really blowing me away here. I'd be real careful. I mean, the stock has had some really positive momentum. So maybe there's some news I'm missing out on. They're actually kind of close to an all-time high, but you know, $240 million market cap. Just hard to trust anything meaningful in a company that small. You know what I mean? Oh, someone said Sprouts Farmers Market. I haven't looked at this one in a while, actually. I do own this one. I'm down bad on this stock. Let me show you. Look, we are down 42% on Sprouts Farmers Market, or 550 bucks right here. I think they're just kind of being out innovated. Like if you like Sprouts Farmers Market, you'd love Amazon because Sprouts Farmers Market, they're like a healthy grocery store. And that's what I like about them more than any other grocery store. They're like a healthy oriented grocery store. And it's kind of like if you like Sprouts Farmers Market, you'll also love Amazon Whole Foods. And they have an online presence where Sprouts Farmers Market really doesn't have that online presence when Amazon Whole Foods does and Walmart does. So anyway, I like them though still. I definitely am not selling or trimming them because they're so cheap. They're only trading at 13 times forward PE, so 13 times net income, and they've had some nice margin expansion. Look at the net margin year-over-year growth rates at the bottom. It's only grown grocery stores are really a net margin play because it's a really low net margin business, and they're growing it every quarter. And they have phenomenal net income as well, up 12% year over year, and they do buybacks as well. So the net income's up by 12, but the net income per share is up by 16 and a half because the share part of the ratio went down from them buying back their own shares. See, I really have no complaints around this stock right here, except that that might be just a moat issue. Yeah, look at the buybacks they're doing at the top every quarter. Just crazy buybacks, rewarding the shareholder, bought back 4% of the shares on the dip. So yeah, but might just be like Amazon might be a better purchase or something. Walmart is the only Walmart is like a pure grocery store player. Yeah, like Walmart. Yeah, this is a I like what they're doing with Sam's Club. So Walmart has the normal like grocery store, and then they have Sam's Club, which is like a subscription model, kind of like a Costco, where you have to pay for a subscription just to get into the store. And whether or not you go to the store, they're collecting that high margin subscription revenue. So pretty cool. Sam's Club launches 1 hour express delivery service. Look at that to compete with Amazon. Kind of cool. They said it's $5 less than Costco's delivery or service or something. Yeah, Walmart's super expensive. Walmart's like a 45 forward PE. Just tough. GMET. What's up, James? GMET. All right, I'll check it out for you. Sorry if wait. GMET. Yeah, look at that one. I type in GMET. That stock doesn't exist. So unfortunately, I'd like to cover that stock for you, but I type in GMET and it doesn't show up there. So Scott said HST, and then we'll do APLD. Yeah, hey, wait, HST host hotels and resorts. So a hotel play, like a leisure hospitality stock. Unfortunately, this stock is the same price that it was in 1998. So if you bought the stock in 1998, it's the same price that it is today. Maybe it's just this leisure industry. So you get a high yield, like a 4% yield, but it is a high payout ratio. They're paying out 72% of all their earnings to pull that off. So they own a bunch of hotels. What's the net margin on this? So the hotel, actually, look at that. So their hotels run at a like 8 to 10% net margin. I know they're really recession prone, but they're still making good net income every quarter. Let's go see how much the dividend costs exactly. We can see how much the dividend payout ratio really is. So we go to the cash flow statement, dividend cost. So the dividend cost 137 mil a quarter. Do they pay special dividends? Why start that 1 quarter every year? Huh, they do pay special dividends, or like the dividend changes every quarter. That's odd. Anyway, I don't know about this one. I mean, it hasn't performed too well historically. A 19 forward PE. If you like that hotel stock, you'll love Hilton. Hilton is a real winner. Instead of spending all their money on dividends, they spend it all on share buybacks. For all of history, this stock just has bought back 5% of all the shares every year. This is actually one of the most impressive stocks I've like ever seen, believe it or not. Hilton Worldwide, you wouldn't believe it, but it's so impressive. I want to show you the total common shares outstanding metric. So if we just go, basic total common shares outstanding, look in the bottom left. There's 230 million shares. Last year there were 242 million, and the year before 260 million, and the year before 280 million. So literally for all the time, in 2018 there was 296 million shares. Now there's only 230 million. So you own a lot more of the company. And that whenever they buy back their own shares, it gives you more ownership in the company, makes the dividend cost less, makes the EPS grow faster. So I'm actually a big fan of companies that do share buybacks. And I specifically look for companies that do share buybacks. RCL, summer's coming. Oh yeah, Royal Caribbean. This is the best cruise line stock. I'm not really a huge fan of the cruise line industry, but if I had to pick one, this is by far the best one. Check this out. I know there's what's Carnival Cruise Line, but this one makes really good consistent net income. I couldn't believe how fast they got profitable. They actually print real after tax net income, like close to actually over $1 billion of net income a quarter, and it's true. They make over $1 billion in net income a quarter. They only trade at 15 times next year's net income. So it's actually a really interesting, like leisure, hospitality, travel spend play stock right here. You get a 1.3% dividend. So I know Disney is also opening some cruises right now to hop in on the trend, get that profitability. So APLD, this one I don't really have too much good news. So this is a data center company. Basically, what they do is there's nothing proprietary. This is the one bad part. There's nothing special about this stock. All they do is just own a bunch of NVIDIA chips. They own a crap ton of NVIDIA chips, and what do they do with it? They rent them out. They just rent out these data. They rent out their graphics cards in their data centers. So, but they've just got approached by some big names. Morningstar says they're overvalued despite surging revenues driven by AI infrastructure demand, severe unprofitability, immense negative free cash flow caused by extreme capital expenditures, and excessively high valuation premium warrant strong caution. So yeah, that's a tough part. Like this whole industry isn't profitable. You look at any just not the industry you want to be in. I want to be the company selling chips to APLD. I don't want to own really APLD, but I'm sure that stock will probably still do good through the end of the decade. But NVIDIA, this is one of the Ponzi kind of circular moments here where NVIDIA is kind of pumping them up. NVIDIA is giving them money just for them. Oh, wait, no, actually, sorry. That's a stock NVIDIA just sold out of. We go to what stocks NVIDIA just sold all their shares of. They sold all their shares of APLD, and they actually bought a bunch of, they got Nebius and CoreWeave. So CoreWeave, Nebius, Iris Energy, they all do the same thing. They just own a bunch of graphics cards and just rent them out. And that's why I don't love that one as a long-term thesis. It's not a profitable business. Nebius, APLD, CoreWeave, Iris Energy, they all lose money and are nowhere near profitability. So I don't see the hype around that industry that other people see. But those will probably still do good, but the movie, what's up, man? He said, Nokia, please. Hey, that's another one. We were speaking of NVIDIA's portfolio. If we go to the NVIDIA portfolio right here, yeah, check this out. NVIDIA actually owns 6.4% of their portfolios in Nokia. A lot of people know them for their phones. Check this out. Nokia, in the year 2000 was a $57 stock, and it's a $10 stock today. But they've converted. They're no longer selling smartphones. What are they doing now? They're doing network infrastructure, mobile networks, and cloud. So they've kind of converted the business. So if we go to their net income, here's the interesting part. They're supposed to stay super net income positive. They're going to make 260 mil next quarter, 390 million next quarter. For every quarter they're making, if you average it out, a couple hundred mil in net income. So I'm actually surprised on how profitable Nokia actually is with their new business. So yeah, they're all expensive though, like a 31 forward PE. But look, it's getting cut in half. They currently trade at 75, but it's only going to a 31 that's getting cut in half just in 1 year. So Morningstar says they're overvalued while surging AI-driven demand in data center optical network provides strong growth momentum. The market's over-enthusiasm ignores persistent headwinds, intense pricing pressures, and intensifying commoditization in core network business. So I get that could be some fear. And again, they are probably overvalued with the NVIDIA stake. NVIDIA buys shares, so they probably rally more than they should. But they're still going to make a lot of net income. Okay. What's next here? Wrong. Nebius is a neocloud company and offered chips. Yeah, at the end of the day, Ray-Ban, all Nebius does is own a boatload of NVIDIA chips in a data center right here. So let's see if there's any. We can go over Nebius. This is a Netherlands company, actually. I guess Morningstar says dang, why is Morningstar always so bearish? Morningstar says Nebius is overvalued, a massive multi-billion cash flow burn requiring substantial shareholder dilution, and high sensitive to AI GPU utilization rates require caution. So yeah, Nebius Cloud right here. So if we go to the net income projections, look, it's not really a profitable industry. Nebius is going to lose 250 mil in net income and then lose 310 million the quarter after. So it's tough. These leasing companies aren't profitable and they're nowhere near. And it's not just them. It's like Iris Energy. So it's all of them. Do you own Hilton? I actually do not own Hilton. Thoughts on SanDisk? SanDisk, sell or hold. So SanDisk, this is your memory shortage play. Is it SNDK, right? So yeah, SanDisk right here. First off, congrats if you own this one because they're at an all-time high. I wouldn't be opposed to maybe trimming a little bit, but I actually would not sell all your shares. Do not fully sell out of SanDisk because here's why I think they could actually go a little higher. If you look at their forward PE, it's only a 10. They only trade at 10 times next year's net income. I feel like that could stretch up another 20% to like a 12 forward PE, which wouldn't even be that expensive, and that would send the stock up another 20%. So basically, they're pricing in the future growth of the net income. Like there's a reason the stock has gone up like a berserk from $40 to $1,000. It's because of these future net income projections. Net income it's a company going from losing 20 mil every quarter to making 10 bill a year. Or next quarter they're going to make 2.16 billion. The quarter after they're going to make 3.32 billion, to the point where they only trade literally at 10 times next year's net income, which starts to make this look very cheap actually. So that's why like I could see this one continually stretching up higher, like another 20%. That being said, I wouldn't be crazy about buying shares. I wouldn't buy it right now, but I definitely would not fully sell out. Dexter fan, what's up? Hey, I recently got back into watching Dexter. Talking about Dexter Morgan. But here's Magna Chip Semiconductor. Yeah, he said check out this stock. Let's do it. So I would be careful. If you look in the top right, they're only worth 190 million. So that's a very small market cap. Yeah, they need a stock split. Yeah. But I have 3 shares. Oh, nice, Carlos. So here's Magnachip Semiconductor. They're only worth 190 mil. So that's one thing. It's just hard to trust companies with such a little market cap. But and it's also hard to trust because the revenue just went negative. The lifeblood of the company, the revenue is actually down 20% year over year, which, with all the data center hype, shouldn't semiconductor stocks be, shouldn't the orders be through the roof? That's why I think this one has kind of underperformed every semiconductor stock recently. So that's one thing you just want to be careful of. Good balance sheet, though. Doesn't look like any bankruptcy risk. They are losing net income every quarter. Are analysts projecting them to... There are no analyst expectations, actually. And revenue is supposed to be flat. So yeah, actually nothing's really blowing me away there. I apologize. I didn't mean to be too bearish there, but just be careful with that one. If you're looking for like a real semiconductor stock to buy and hold forever, I don't think I'd choose that one. But they are cheap. Maybe a fun little swing trade, short-term swing trade, something like that. PTL, 2 different upgrades. Hey, what's up? I'm so behind here. I apologize. What's up, Michael Anthony? And trading with Golu, what's up? I create indicators. Do you want to create any indicators? Nah, see, that's like technical analysis. Like this whole stream, I've never once looked at like RSI. Like, I just really judge a company off their financials because that's what really moves the stock in the long run. I can tell when a company has undervalued financials, but I'm not too good at like bullish continuation wedge or, whatever, engulfing candles, because that's short-term swing trade. I'm always long-term buy and hold forever. So let's check out PTLO. I think this is like a restaurant right here. This is going to get me hungry. So I'll show you their website really quickly. They sell like street food. So, which is a tough industry right now. So yeah, they sell, I guess, here's what they sell. Hey, that stuff looks, strawberry and lemon cake shake. That sounds delicious right now. Yeah, they kind of sell just like stuff like this, kind of like who would be a competitor? I guess like a Chick-fil-A, a Checkers. I have no idea. But anyway, we go to their profits right now. The revenue is kind of slowing right now. The revenue is only up 0.62%. And the revenue, or actually good news, they're making net income every quarter. So they are profitable every quarter, but the profits are just really low. It's like a low net margin industry, like low single digit margins, but at least they're making net income every quarter. So the whole company is worth 480 million. They're worth 480 million, and they're still making net income every quarter. Ooh, they do have some debt to pay though. So actually, let me check the long-term debt. So they do owe, 237 million in long-term debt, another 100 million in short-term debt, and 100 million capital lease obligations. So it would... That's a lot of debt to pay off, and that would take them a very long time with current net income levels. So I can see why they've kind of been struggling. Oh, dang. So 13.5% of all the shares are being shorted. But it's not the end of the world, though. Yeah, 32 forward PE. I would be cautious with that one. And again, if you look at any stock, like look at even Wendy's. RIP Wendy's stock. I mean, they're at an all-time low basically right now. So it's not just like a them problem or like a Jack in the Box. I don't know if that's a similar one, but yeah, look at Jack in the Box. All-time low or at the same price they were back in 1998. So Can you talk about GE Veranova? Sure. Yeah. This is actually a really cool energy business. So if you did under every single data center is a diesel generator because these data centers, if the actual electricity grid goes out, they have to have backup power because every second these data centers are down costs millions, billions, and lost data, whatever. So they always have to have a huge backup diesel generator. And GE Veranova is the one that makes that. Oh, yeah. GE Veranova to increase gas power production to 20 gigawatts. So you won't believe their backlog. Look at this, the second line. GE Veranova turbine backlog, 200, wait, why are they wording that so weird? 200 billion total backlog. So just crazy. So actually, it would be better if we look at it from the earnings recap. So, oh, dang. So electrification segment surged 61%, boosted by a 2.4 billion equipment order for data centers. So yeah, with all these new data centers being built, they got to have these gas turbines. So Morningstar says they're reasonably valued. Its leading position in oligoplastic gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth. And they really do have a $200 billion backlog, which is just nuts. So GE Veranova reports nuclear project is 38% complete, targets 2030 power projection. Anyway, I certainly wouldn't buy this one at all-time highs, but it's a great company. Hopefully that was kind of helpful there. But yeah, super expensive, all-time highs on the stock price. So ALMU, is that an aluminum? Oh, I saw Micron too. We'll look at Micron. So yeah, I think this might be an aluminum stock no, a semiconductor company. Okay. They have 14 employees. Okay. So this company has 14 employees. Okay. So they're only worth 340 million. So be very careful. Yeah. With that market cap, they're only worth 340 million. That is rough. But they, so yeah, this is why they're worth so little because the revenue is so little. The revenue is only 1.2 million of revenue. Someone said, how do you go live with your screen like this? Hey, I'm actually, I'm on an Apple TV screencasting to my computer. So I'm actually streaming on my desktop and I've just, I'm projecting my phone on my computer and just streaming my computer. But yeah, I'd be careful with this one. Only 1 mil of revenue a quarter. Good balance sheet. Looks like they probably diluted you. Yeah, diluted you by a bunch, but they fortified their balance sheet. But yeah, just little revenue. It's just like, wish I could give you real thoughts on that one, but you got to be real careful here. Next up, well, let's look at a couple more here. I'm looking at that stock right now. Check Poet. Okay, we already looked at that one. Okay, we can look at it again, I guess. This is, then we'll look at MXL. And Powell Industries. I love that one. Yeah, hey, don't worry about it. Check out NOW. Hey, Paul, we already looked at ServiceNow like 4 times already. So I'd appreciate if you kind of like rewind the stream and find one of the times I already analyzed it because out of respect, I don't want to go over it again for the new people here. Next up, we'll do Broadcom. And oh, what's up, Tangrika? How's it going? Thanks. We'll look at Ondas after this. So here's Poet Technologies. They've had a massive rally on Friday. They went up 30%. Are there any like comments? Okay, I cannot. Okay, well, let's see. What's their revenue right now? Oh, they have no revenue. So that's something you got to be really careful with. So revenue this quarter was 300,000. So 300,000 of revenue, lost 50 mil of net income on it. Analysts are projecting 900,000 in 2 quarters. So really rough thing to trust here. Our products, yeah. Looks like they sell like circuit boards and stuff like that. I guess here's their actual products, but like all this stuff is on their website. But then again, the revenue is 300,000 this quarter. So maybe there was some sort of specific news that sent this stock up. I don't know if they're just following the positive momentum of Intel, but okay, CFO, okay. Oh, never mind. That's not the right stock. Poet surged over 100% this week after CEO confirmed what? Why is that the headline? And then it's like not showing me where it is. Okay, right here. Poet Technologies surged over 100% this week after CEO confirmed business relationship with Marvel and dismissed short seller report. Oh, cool. That must that'll do it. But yeah, you want to be careful. That's such little revenue still. Oh yeah, hey, I'm also streaming on YouTube. That's what I mean. On YouTube, you can like rewind the stream on YouTube. That's the best way to support me if you want to subscribe to my channel. I'm trying to build my YouTube up. Hey, thanks for all the birthday wishes. Thanks, Isa. Yeah, thanks so much. Waste management, thanks. Let's do it, Tangrika. So waste management, this is like an AI-proof business right here. AI, people are still going to throw away trash, and that trash has to go somewhere. And land waste management owns the best and most valuable landfills and stuff like that. So there can't really be any new ones in certain places. So anyway, oh yeah, look at this. Um, Actually, Morningstar says they're overvalued. They have while the company's irreplaceable landfill network and strong pricing power ensures durable cash flows, investors should remain cautious of rich multiples. Yeah, that is one thing. You want to be careful that they are a little expensive. What's the valuation? Let me check. A 20, I mean, not really. A 28 forward PE, that's not exactly nuts, 28,000 or 28 forward PE or 28 times next year's net income. They also acquired like a year ago this medical waste disposal business for $8 billion. I think they're just now realizing some synergies from that. But yeah, they print money every quarter, easily like 700 million in net income a quarter. And Bill Gates likes it. The Bill and Melinda Gates Foundation, they own 7.2% of all the company. So you get a good dividend, like a 1.2% yield too. Um, yeah. Okay. What's your YouTube? Hey, my YouTube is called Nathan Robert. It's also in my link tree, but yeah, you can just type into YouTube Nathan Robert. Next up, SOXL. That's a cool semiconductor ETF. Oh no, this is a semiconductor bull ETF. Okay, so this is something you trade. It's the 3X ETF. So basically, whenever SMH goes up 1%, this goes up 3%. And basically, it just owns, or it's the top AI stocks by market cap, like Nvidia, Taiwan Semi, Intel, all that. But then it just 3Xs it as an ETF. Basically, 3X whatever SMH does. So yeah, pretty cool. You definitely don't hold that for the long run. You swing trade it. Next up, I saw hey, what's up? MXL. Let's see MXL right here. Max Liner. Huh. Dang. A 76% rally on Friday. So they reported earnings, it looks like. Is there any like specific news here? No, I don't know. I think they reported earnings. So they do communication system on chip solutions. Well, the revenue forecasts are really good. Revenue is going to go from 126 to 169, and they're going to make 1.8 million a profit on that. So actually, so they're going to go from losing like 40 mil a quarter right now to making a million of net income in 2 quarters and 169 million revenue. So revenue is going to grow a bunch, net income is going to grow a bunch. Maybe that guidance is what sent the stock up. I have no clue. Okay, so yeah, it looks like Max Linear jumped 77% on upbeat Q1 results and much stronger Q2 outlook, ignite AI data center optimism. So yeah, coupled with how good all semiconductor stocks did on Friday, that sent that one up 72%. Still want to be careful with that one. Campbell Soup, yeah, CPB. Yeah, I'm gonna look at 1 or 2 more here, then I gotta go. Dang, I've been live for almost 3 hours. So here's Campbell Soup, and I got a bunch of stuff I gotta do. I'm excited. So anyway, here's Campbell Soup right here. This is a food company. They basically trade cheap. Look at the valuation. They only trade at 9.6 times next year's net income. So 9.6 times forward PE. But the growth that kind of just went negative, like the revenue, the lifeblood of the company, just went negative 4.5%. So revenue's negative, and the profits. So the revenue's down 4. The profits are down 22. So that also means margins are going down as well. Gross margins are down 8. Net margins down 12. But you basically buy it to maximize your income. You get a 7.5% dividend yield. But again, it's not just like Campbell Soup that has gone straight down in that bad chart. Like look at General Mills as well. The chart looks identical. It's also just had this awful little downtrend. So it's like all food companies. This one might be a little bit of a safer buy, a lower yield, but I think it might be safer. You get a 7% dividend, which is still a really high yield, but they're a lot more diversified into a lot of different brands, and they own a lot more brands as well that I trust. Honestly, the very best one, though, would be Mondelez, MDLZ. They own the absolute best brands and have fallen way less than all the other ones. They own like Oreo, Toblerone. Oh, yeah, I kind of see at the top here. Nah. No cookies for you, but yeah, here's some of their brands like Oreos, Ritz, Toblerone, just like a bunch of chocolates like Cadbury. Let's actually see. Can we find their like family of brands? Yeah, they own Philadelphia cheese. This here, they're like Halls, like the cough drops, Milka chocolate. So this one, Belvita, it's like a little breakfast bar, Oreo. So I don't know. I won't go through all these here. Yeah, Cadbury. So cool. Anyway, that's another kind of food play that I do like more than a lot of the other ones. And it's still on a dip too. It's still on a dip. Congrats on Fix. Hey, thanks. Yeah, Comfort Systems has been pretty insane. All right, last up, RMD right here. So this is a sleep apnea play. So they sell like those CPAP machines. I really like this company actually. They're cheap. They only traded at 19 net income, 19 times net income. Their sleep and breathing health are growing very nice. You know, it's up 11 after 10, after 11, after 5. So really nice growth there. And they also have this software business, which I like as well. So anyway, when we combine all the businesses, the revenue grew 10% year over year. And on this 1.4 billion of revenue, they kept 400 million in net income on that. So they really did. This is the highest ever net income quarter ever, most profitable quarter ever. And the CEO recently came out and said that these CPAP machines, people on weight loss prescriptions stay on sleep apnea stuff longer and they continue with it and they're more likely to use it. So basically he's saying this should benefit from GLP Ozempic stuff. And yeah, you get over 1% dividend. So you buy the stock right now, you're getting over 1% of your money back just in a dividend. So yeah, anyway, pretty cool. Like a sleep health, sleep breathing company. Pretty cool. So anyway, that was the stream. I hope you guys have a great rest of your day. Let me end this with a quick portfolio update. Yeah, hey Jello, thanks so much. Yeah, it's my birthday today. I appreciate all the nice wishes. Thanks, Tangrika. Oh, and I'm so sorry. Actually, Brad said, can you check Dutch Bros for me? All right. Yeah, actually, final stock, we'll do Dutch Bros. Thanks for the nice words there, Brad. All right, Dutch Bros, I actually like them a lot. And then we'll do the portfolio update. Then I'll get out of here. I like them a lot more than Starbucks. It's kind of like a Starbucks competitor selling like energy drinks, coffees, milkshakes, stuff like that. So 92% of the revenue comes from the company-owned stores. So the ones owned by the corporation. And it's grown really nice. It's up 30%. After grew 39, after grew 30, after grew 53. Just incredible growth, partially just from opening up new stores. But I also like this franchising revenue where they collect a high margin royalty on 4% or it's 5% on all the franchise store sales. You go spend like $100 at a franchise location, $5 of that goes back to the parent company as a royalty. So look at the forward projections. Revenue is super good. Revenue's going from 415 to 515 or 517 in year over year. So they're going to have great revenue growth and net income growth. Net income is going to hit 43 million in 2 quarters. If we zoom out, it's never even been close to 43 million before. So they're really profitable. They have nice growth. They might just be a little pricey. So where even though they're kind of on a dip, like they're still expensive at a 57 forward PE. So now is not the time to go crazy buying the dip yet, but maybe it's like a small size position. Maybe small nibble or something like that. But yeah, so here's my Robinhood portfolio. This one right here is called my dividend-only portfolio, where every stock in this account pays a dividend. Year to date, we're up 3.3%, and over the past year, we're up 26%, which has underperformed the S&P. The S&P the past year is up 30, and year to date, it's up 4%. So we've done a little worse, but that's okay. Here's all the stocks that we own in here. Here's our total percent change. I love being fully transparent. I'll share with you every stock that I own, how much I'm up and down. Yeah, Google's been our biggest winner in here. We got Google, Meta, Constellation Energy, United Rentals. And then we also have a Roth IRA, which is down 6% the past year, which is when we started it. Here are all the stocks that we own in here. You know, they haven't done too well. Actually, my most recent purchase, Care Trust REIT, is one I really like. It's a real estate investment trust and senior housing, skilled nursing facilities. And then we have our Webull portfolio. This is like my risk on account. I know I own way too many stocks for sure. But yeah, here we're only up 21% all time in here. But these are all the stocks that we own in here. AMD, Dave, Futu, Robinhood, SoFi, Reddit, Microsoft, AppLovin, Uber, AbbVie is a really good one I like right now. Zoom. So yeah, Sprouts Farmers Market, we're a little down bad on there. Happy said, thank you for the first time here for your birthday. See you on YouTube. Yo, thank you very much. I appreciate that. And then finally, this is the big winner. This is my Moomoo portfolio called our never sell account. We're literally, once we buy a stock in here, we're not allowed to sell it. So even though we're up like 869% on this stock, I've never trimmed a single share and I'm not allowed to. So we're not selling or trimming out of anything in here. So that's why we've done so well, because at first time I was like, dang, I'm up 300%. I should sell. I should trim a little bit, but thank goodness I never did. And yo, Brad, dude, thank you very much, dude. Brad, for the confetti. I really appreciate that, man. So yeah, that's our Moomoo portfolio, and year to date we're up 60% in this account, which really picks up the slack on our other portfolios. So yeah, anyway, see y'all soon. Hope you guys have a great rest of your day. Thank you for all the birthday wishes. I'm going to the Cheesecake Factory to get some food and stuff. So yeah, see y'all later. And thanks again. Hey, if you're still on the YouTube stream, please hit the like button for me. That's the only birthday present I need. Watch out for people impersonating me. I sell nothing. I have no course book, WhatsApp, Telegram, Discord. I don't coach. I literally sell nothing. Just on your give my opinion. And best way to help me out is just hit the like button. But yeah, see y'all.